Hey, how are you?
Very well indeed. Welcome, everybody. Well, welcome from Scotland.
And
And
welcome.
Angeline, where are you tuning in? You're in Australia, right?
I was in Dorset, but now I am in London from my home. How are you? How is everyone? It's been sunny. It's been wonderful. Loving the pictures from Phil and the gang as well, who stayed very late to rig this up on Friday. So shout.
What exactly was happening in the studio then?
So hopefully the people on Discord, the good people on Discord, have some of these sneak preview pictures as well. After we came off the show, we had a huge amount of unplugging, ripping out of wires. Then the whole of the technical bits in the studio was being linked up with the boardroom so that they can drive the show from there. Beloved studio, Rich, is being being made all shiny and new.
Fantastic. Beloved studio. It's a few years past the renovation, isn't it, Ange?
It has been well overdue. I think a lot of kit in there, more than 10 years old, in need of some love. So it's about time.
Good. Right. Well, I'm in sunny Scotland. I've had a wonderful weekend. So it was the local horse racing meet on Saturday. It's the most northerly racecourse in the UK, and it was beautiful sunshine. Honestly, Scotland is the most perfect country in the world, is my argument. When it's 24 degrees, everybody was happy. Everybody was watching the horses, getting the bets on, and my mother was the one who made the most money.
Wow.
She managed to catch the winning race at, I think it was about 9-1.
You learned from best. Give us the name of the winning horse.
It was Moonbeam.
Oh, I love it. I love horse names. Especially horse names. Fantastic.
So that was Saturday. Had a lovely, quiet, relaxing day yesterday. And then today and tomorrow, I'm off to the Edinburgh Fringe Festival. So this is great.
Aaron is going to be there as well, isn't he?
Oh, really? I'll do my best to avoid him. Okay.
I think he is.
Right, let's have a look at what's coming up on today's show. Our live show from abroad. Ange, take us through it.
Right, we got overnight action with myself and Richie Rich, as well as opening bell, and we'll take you through fast markets, all the big movers of the morning here, and then tech. Tell us who you've got, Rich.
We've got Piers. That's, of course, our tech focus. Piers Buckworth joining us to talk about a big Intel move. He said it was a 20-month trade, but certainly getting helped along by Trump and about taking a stake with Nvidia's and AMD's money.
Yeah, he'll also be very, very happy, I think, happy lad after that move on Friday with Palantir. And then we got all
the only one.
all sessions. You're back with 9 big movers ahead of the game at Wall Street, and then Axel Rudolph joins us for Trade of the Week and Technically Speaking.
What's the Trade of the Week going to be, Ange?
Ooh, I don't know. Maybe he might take us through Nvidia and Palantir after Friday. We'll see. Lots of questions from friends about asking whether, it's buy the dip or whether we should wait a bit more. It will all depend on what Axel says, so stay tuned for that.
So good morning to you all. Gavin Ackers is on, Julie and Andrew McKelvey. Wishbone Gold we're talking about with Andrew. Boise, good morning to you, sir. Donnie and I, Darok as well. Now, and you take us through go into overnight action.
Here we go, friends. So on the front page of the financial, Zelensky and also the allies to press Trump on security guarantees. Going to my screen here so you can see.
That was it.
Yeah, here we are.
Everything on Friday, wasn't it? I got in and sat watching as Trump arrived, as Putin arrived, who was going to get out of the plane first? It was incredibly coordinated, but I did really enjoy when Trump decided to use or 4 F-22s on either the.
What's also key, of course, very, still playing the card here. And behind the scenes, many reports saying he's going to press, of course, Zelensky, who Obama and Merz and Macron there as well. So press sort of deal whether he likes it or not to land this troop Russia. All this coming as well as when failed. I was watching over the weekend, trying to, figure this out on the train back and forth to Dorset. There doesn't seem to be any just yet, so it's still anyone's call on what happens later today. Zelensky, though, has mentioned more than once. He's mentioned it on X as well. Those of you that follow him on X, that deal is going to hold. Going to deliver protection on land, in the air, and
This turns into against Europe and Ukraine. I mean, obviously, we know Trump to bullying tactics before. Do we worry that Europe gets a 25% tariff slapped on it if it doesn't agree to the behind the scenes that was clearly made on Friday?
Look, we can't put anything past Trump 2.0. We've been here before. Anything's possible. It's also possible he could slap that on and then take it off that tack again. What is clear is that we are seeing that is risk-on sentiment coming back into the equity. Asia Pacific markets mostly right ahead of those talks. Futures also
Trump on what they want. Now it's just a problem that
Europeans get involved and try and push back on it. But I think it's quite clear that common ground being found between Trump and Putin. I mean, all the handshakes and the clap, just absolutely unbelievable for what regards as a war criminal.
yeah.
So
I'm sure something has been agreed. Things in the background. Unfair to show the, talking. Everyone has in the talks to come to a deal. So I think, far rich, a lot of drama, lots of opera, lots of fireworks and so they show that they have been talking to reach this there, which I've made for some ways of looking at this, we get a deal. Assets, but stocks could get a bounce. Also, of course, the deal, but further uncertainty remains until we, as they say.
which one's
Which
that?
is
I didn't see her.
probably me, because I've probably eaten too much over the weekend and tried to frantically at Rich and Phil. It means that the curry I had yesterday need to suddenly head off. But I did have a huge curry.
Moving on. So interesting, from Bank of America this morning, we're getting a note from Hartnett, and he said people raise their allocation because yield curve policy disruption will drive the US and emerging markets. And this isn't a short-term thing. He's talking years ahead. Of course, that's ahead of Jackson Hole this week. That's the big thing. Once we get past all the theater going on in Washington, we look towards Jackson Hole on Friday. Powell is expected to announce the start of the rate, but will he point towards, or just say that it's time for that first cut to come?
It's an interesting one. I think he is that data with that these prices.
Do you think though, and the now had a weak enough jobs, 3 months of job data that has been weak, and inflation's in line, he will on Friday announce that?
Yeah, I've thrown gold up, trader friends. 11 for you, but want to do, you can see.
Well, let's trying to do that. I'll a secular dollar bear. That's huge. Bank of America, US is entering a secular dollar bear. You've got
failed to get back to high seen since
morning on the back of that Hartnett note.
Interesting. Well, I
a little bit through.
Everyone, 3348 is the number to remember. As I was listening to the Art of Investing part 1, because I think I watched the bonds one, gone back to watch the first one. I have had a day. This is not in any way trading advice, trader friends. This is just my own humble opinion. I kind of think, that was a big move pre PPI, and I do think that the Bitcoin Ethereum sort of buzz has stopped for now. But there is a lot of, I've been doing some research, there is a lot to point towards it going into other sectors. So it's cycling back into gold and other safe haven assets for now. So
well, Andrew McKelvey congratulating you for that. He says your Ethereum looks timely.
Ooh, I was chatting with Andrew when he said, wait a minute, I think it's turning, because I was waiting for that point. The safety also timed with, I didn't quite know what was going to Alaska summit. Bit concerned that I might be proved wrong and we might have a sudden deal, but it was altogether very fortuitous. I have been trickling in, the aim now is to trickle back into the really safe bets like Berkshire. So I have quite a bit of money that will go into Berkshire early today.
It's not been that safe recently, though, has it?
I know it hasn't, but I think it will bounce back up, and then also potentially more FTSE and more FTSE stocks, especially those that have been beaten down recently, like a bit more of Aviva as well.
So I think it was Boise actually talking about starting to deep into Berkshire Hathaway. That's quite an interesting one. It's tricky, isn't it? I mean, the stocks were incredible because Buffett puts, I was short all, I was short stock. So Friday that actually I had the one gave me a bit of money to spend up at the festival today.
Yeah, and also meals McDonald as well.
She's a great cook. She'll be listening.
Right. Also call out. Get it, Kevin.
Andrew Lee came out and said he was starting to short it on Friday. And one of the biggest funds in the world reduced its holding of it 20%, I think it was. So all the starting to sell, even though those that are holders of it just know that it's in fantasy land.
So the next shiny new thing, people. I think, is it Andrew McKelvey or one of friends as well in the gallery was asking, what else she'd be looking at. I hope he did get into Aviva about a month ago, because that would be good on him as well. talk about bats and newts. Did you see the story, Rich?
No, I haven't seen it.
To try, but she's now saying that bats and newts are protected, but I guess they.
Oh, this was the palaver
Yes.
before when they spent extra 20 million or something to say.
Yeah. So there's a lot of talk now that they'll even though these issues with bats and newts, there's a story about the is also on the front pages, and this week it is in terms of data later today. Our eyes on, rising volatility across equities as well, especially those sensitive to interest rates. Rich, you're hearing from, well, indeed, are you looking to increase exposure to stock sensitive to potentially any moves in interest rates?
Yeah, I've bought some gold this morning about the weekend. I think the plays come more like Wednesday, Thursday, if at Jackson Hole specifically. So much going on earlier in the defense talks. I mean, anything could come out of there. It's early to start putting on trades. Coming. So if you hold Legal in General, if you hold or Imperial Brand, then you're going to get a nice payment there, as well as Schroders and some Babcock as well. So that's the dividends of the week.
Mm-hmm. Right. Guess the chart, producer Phil. Is it going to be a UK one or a US one, or is it commodities? What is it? It's Europe, people, trader friends. We've got a European guess the chart coming up.
Well, the footsie's dancing in the light, shots on the screen, and again, Axel's got a trade, says it's looking hot, but faster than a scatter shot. Haynes lanes in, says, hold on, boys, I've got questions, don't make no producer Phil. Next slice, and please remember financial advice. Trying hard just to trick. One chart's running like a horse on fire. Another stalling. I'm up higher. Rich is betting big on ball, makes him sweat. The kind of chart you get. The bell hits the string, sparks start to fly. Sounds like a by. Guess the chart let the fiddle cry. Live with IG, where we're riding high. Phil's trying hard just to trick your eye. One fiddle's blazing, the other's fast. Chart when it breaks at last.
Hello, I'm Axel Rudolph, Senior Analyst at IG and fellow with over 30 years experience in trading in the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions, all things crypto, live on Trade Live with IG.
Let's do this. Hello, Pat Cash. So, just mentally the toughest. That's something else. Come on, Pat. Guys, where are you going?
If you're looking for flexible ways to trade financial markets, experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. Going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits. Right, welcome back, trader friends. So what's moving this morning? We got
Let's have a look. Let's have a look at
land securities looking up 1%. Announces the sale of Queen Anne's mansions. Is that your place? Queen Anne's mansions?
Queen Anne.
And then we got some smaller movers as well, but no real big movers and shakers. Eyes are going to be on these defense things. Take a quick look at the futures before we with the DAX down 12 basis points and the FTSE up 10.
Yeah, and it's looking as well like it's pretty much at the moment flat moves right ahead of that incoming summit between European leaders and Zelensky and Trump.
Right, let's get to the stocks then. That is market open.
Well, hey, and
Do we
here
have
we
a bell?
go. Do we have an opening bell, Phil?
How can you get the woo noises, but you can't get a bell right, producer Phil? Come on.
Offer to
Right, there we go.
Here we are.
Angeline, let's get those stocks up.
No, oh no, it's not. Yeah, now it's going. It's green now.
Okay.
Just up, just a touch.
Okay, let's order them by performance again and see who is at the top leaderboard. It is Fresno, followed by BAE Systems. So the defense names liking what they saw. Then we've got Glaxo up 1, Relics, AstraZeneca, strong open for the farmers. And the defensive names with BATS and SSE also outperforming. The SE headquarters about 2 miles away from me here.
Nice. National Grid also up almost a percent there. And Vistry as well. I know some of you trader friends have got positions in Vistry. Interestingly, Halion, which is dying, also up 8% there. Market now pricing in the September rate cut out of the US. However, everything looks a bit sort of on some more developments out of Washington later today. Let's move over
On
to the
the
other
negative side,
Yeah,
we've
here
got Smith down 1.7%. Oh, I got some nice cheap crisps and iron brew at the weekend, Ange.
yeah.
None of this £1.90 for a bag of crisps. 59 pence for a can of iron brew. You can't get better than that. None of this inflation up here.
True
Then,
that there's going to be an iron.
oh, I haven't had one yet. I'll have to test that today in Edinburgh. EHP down 40 basis points along with Anglos and IA lower. HSBC small lower, IHG, Shell all down between 30 and 40 basis along with the index. So the index just really dropping a little bit and BP unchanged.
Let's just move on. There's Dorf also up 0.5%, and Bayer there gaining ground. Any of those names pop out at you, Rich?
Well, this is interesting. So the market clearly thinks that there's less chance of a deal because it's buying the defensive. You were right not to sell your ETF yet.
I had to bite on a stick, that has to be said. I did bite on a stick. I kept my position.
No, I'm definitely so on weakness. Wisdom tree.
If anything is in this kind of strange, commanding but weird, that side by side. I'm not really side by side with you kind of posture.
I
So
can't see it happening.
let's have a look at also just here that are moving higher. ZP also moving a bit higher. And we talked about this a great deal, didn't we? Some of the banks has gone back down. The Mercedes, if these car makers are moving.
It's a story in the press this morning that Tesla are Elon hates that where the cars come in to the UK. cars there. Normally there's 400. He says people are not bring down prices. Not
For how many of cannabis margin numbers. So we may see this once more. For those of you in your thoughts that with rates also coming down expected in the US and then is expected and the UK expected to, well, the UK has already started follow have Bitcoin because it is very to that 64 mark there. Let's have a look at companies here for you. A percent. Same story for platinum there. Silver, just question about silver to go, as Dylan likes putting cuckoo bananas, because it tends to lag gold bananas. It is Washington to also
yeah, platinum's kind of come off the bottom.
yeah,
Down from that.
it was,
And
that's 13.
oh, 100 actually. So yeah, 10% the lowest platinum.
Also Germany 11, so this is coming off that backdrop there. Now you trade natural gas down 2.5%. To France, there having
We
get that zooming in through.
I am just checking up on so
up 0.5%, and oh darn, no,
rent
must have been when I was trying to add it, and I must have picked the wrong one. But
little rodent.
like a little cockroach sneaking. This is one of those you guys to create these nice automatic. I really love that watch list that you and Rich have. Can you send it to us, or is it a default? Actually, what it is Rich. So we have a lot filter it for you. Okay.
So as you wow. oil. Then Renault now £32, 32 euros, sorry. Then Kering,
Mhm.
is it lose-lose for one? They're all, you mentioned they're all turning. Are
So
they going to get a welcome if it's not, if they don't have this, unless his bond market? Certainly argue with who he sees as inferior to his
also been widely reported, Rich, that Putin, Trump, that he would agree only if Russia was handed Ukraine's eastern region. This is the Donbass, and it's going to be a really tough one because Ukraine's not going to want to let that go. I think what we'll get is some sort of deadlock and further horse trading, which is not going to be great for any more uncertainty ahead. Right. So we have the answer for guess the chart. Is that right, Phil? There we go.
I didn't get this one. Adidas.
Ah,
God, that's frustrating.
I didn't get.
Of course it is. I was trying to think what had such a strong rise, almost the perfect move higher, and then had come off. There many European stocks that have acted like that, and of course the one that we talk about almost every day.
Oh my goodness me! Yes, the pair trade advert, Rich. Who got it? Who got it? Was it Funky Given? Well done, you.
But it is interesting now. Now the PE ratio between, so Adidas was much higher. Adidas was in the 30s, and Nike was of course mid 20s. I would say now they're probably both aligned. They're probably both come down to, well, sorry, Adidas has come down, Nike's gone higher to about 28.
The fact remains though that Adidas. I've just been into a Foot Locker recently, a Sports Direct for my, as you know, Rich, and it's still the other brands that seem to be the ones that are in favor at the moment. The Hockers, the Ons, people grabbing an Adidas or even a Nike.
So yeah, I've got a little thing with Hawker recently because I've done in my Achilles.
Oh no!
And it's since I started running in my Hawkers, then I've hurt my Achilles, and then my good friend that was staying with me last week, my bestie from uni, then he was a 1500-meter runner, and I think 3:43 for 1500, which is huge. He's been using the On running, and he's also got Achilles problems.
Oh.
So my personal jury is out on these at the moment, due to that personal injury.
You told me Ange Hockers have got a great bounce, and good for running. Was it where Kelly started acting?
Exactly, yeah. It's just come in the last few weeks.
Speaking of bounce and moves, just reading out some of the top upgrades, downgrades. Dora target price to 11.50 from 13.25. Lululemon Athletica, TD Cowen, cutting the target price there to $298 from 320. Quiet start to the week here.
Should we go to a little break before we go into some fast markets then, Angeline?
Yeah, let's do it. And don't forget to slam the like and button because fills up. Because Rich and I have got a huge surprise for you, hopefully in the end of 2 weeks, when we've got the newly refurbished, revamped Trade Live with IG Studio for you. And any likes and subscribes would go a great way towards that.
And have you seen there's a couple in America, and the husband started videoing his wife and pretending to be an buddy, welcome to my page. Say hi to my wife. We're just going into Walmart, and of course she's just embarrassed by it all because it was just a joke. But he kept on doing it, and he did it. She was getting her nails done in the nail salon, and he did it in a restaurant. But her reactions are so funny that they've actually become stars in the US.
Whoa.
They've been on TV. So that's what he says. He says, smash the like.
Smash a like. With a whack up the chart. Dylan's asking me, why do you say whack up the chart? And I just said, because it tells the gallery up. It's time to put my chart. So
profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready for the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Do you like tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 indices, forex, and commodities without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Yeah, morning, mate. Good. Monday morning. No. Quite the opposite, mate. Monday morning. In other words, ready to go, pal. What, Reuter? You're he wants to. Rich, how you doing? Yeah, up to 6, 7, 8. Yeah, right there. Well, it does, but it's also got. I mean, the US market is this perfect rotational machine until it's not, but most of the time it is. And by that I mean we've been going through essentially 6 months of leadership in the AI names that we all know too well. And you and I have spent a lot of time on the show recently talking about the likes of Palantir and how much that's turned into a bubble. And there's no price there. That is now in a bubble from across, the very definition of a bubble based on the valuation. But the risk is if this continues along with the likes of Microsoft and Nvidia, which are also going up in a straight line, is that those names are getting too ridiculous. So there has been a little bit of an under the hood rotation going on. In other words, a renewed mild bid for Europe. It's more about the rotation. On Friday, the price action was so clear to me. If you look at emerging market ETF, Intel, order, Nike, IBM, Eli Lilly, healthcare, value, parts of the market that haven't been bid up were all bid, and Nvidia and Microsoft and AMD were all for sale. So my hope is that continues. It would be healthy, and that would be rational. But it's not often that we get healthy and rational. Yeah. There always has to be a kind of catalyst, I suppose. Sometimes these rotations happen without, but I think that PPI print, and if you look at the detail that we got the other day, it kind of took the market by surprise. It was hot, after this we just seen, which should calm. I've been kind of very keen for the market to do something more rational, more healthy, more rotational for quite some time. Maybe that was the catalyst. Maybe it wasn't. Maybe it's just the right time. Maybe it's seasonal. Who knows? But it needs to happen. Today the futures action, although it's to me that it's going to continue to do its usual morning rally up 27 basis points on the Nasdaq, and now we're back to flat. So which is a different vibe to what's been going on recently. It's been staying there and just holding there. Being the headline. There's potential fireworks from the Jackson Hole is usually it has in recent years a pretty big event for markets in terms of what he says. We've seen some pretty wild swings. So it's an interesting moment for him to be doing a Jackson Hole speech. So we'll see how that goes. But Yeah. Banks, right? That's the question. Because they're very overbought and very high. They've been rallying along with the tech stocks because of obviously the yield curve. So the question I have is, can the market hold up with just a select group of IBM and Intel and Estee Lauder and Nike and all these kind of names? Can the market hold up with that stuff? I don't know whether it can. So I think we need it. The market probably needs to have a sell-off.
I'd rather be in the equal weight than the normal S&P. Put it that way.
That's sorry. Yeah, that's exactly right. Out of that list of things, markets, Russell, equal weight, I would go for the equal weight every percent right here.
Great. Right, we're getting the questions in then. Pelican asking thoughts on CoreWeave because the lockup is over.
Yeah, correct. There's been a lot of volatility. I listen. I have a kind of a rule with these things that I've used for years, which is that I wouldn't touch unless you want to get in and out on a very short-term basis and ride a bit of the initial momentum. I wouldn't touch these IPOs, whether it be Circle, whether it be CoreWeave, until they've had about 3 quarters of operating as, because then you've got the lockup done, you've got the liquidity, you've got some earnings guidance, you've got a little bit more sort of track to go by. Otherwise, you're just gambling, right? I mean, sure, CoreWeave is an exciting story, but they have loads of debt, as we've discussed. They've also been to, now the lockup's done. They've done, there's lots of stock being placed by the banks, by the brokers on this deal. There's lots of stuff going on, so I'll just let it settle down. To buy it, I like it a lot. If you look at it on a valuation, sales, right? One the same, right? They're in bed with each other, and the reasons why Foot Locker have been struggling is kind of in a very similar boat, and they've both had very similar outcomes over the last very big. I just think once a company has been subject to M&A, this one is, it's kind of just, it removes a lot of the, it moves over to the risk arb guys, right? And it's less interesting. So I'd be focused on Nike, not Foot Locker.
I've just been, so Piers, we had a bit of a problem to start off with in the studio, and it went down quite with the audience. And
great.
Some if that way, let's just keep Rich on mute and have.
Okay.
through your Phil's going to pull up a chart.
Yeah, so I suppose the first thing I'll say is that, you know, this is by Trump and the administration as to how strategically important this company is. Which, you know, if we had to cut down this to its nuts and bolts, that is it, right? That this, which is hated and short, got any. We're trying to onshore all the big you know, the powerhouses of TS administration. Donald Trump himself would absolutely love boundary hope in the United States. So when he made that comment about Lip Boo the other day, which by the way was just so ridiculous because the guy he doesn't know his track record, he doesn't really know his history, and Lip Boo cleverly went straight to the White House, sat down with him, had a rational conversation, talked him through his history. And he ultimately, you know, at the end of it said, well, I didn't really know much about you.
Yeah, I received from NVIDIA and from AMD.
And by the way, you know, the unspoken sort of detail. I don't want to use the word coerce, but we may as well use that word. Coerce Broadcom and NVIDIA, Intel's. So he's trying to pull away from 18A process, right? But end up with them going neck deep and having NVIDIA and Broadcom to basically move their business from TSMC to Intel, because they have the capability. But for the you know, the very will be interesting to see whether rain managed to get through 26, 27, and then hold that.
Do we get through the theater in Washington today, then we get through, people are going to start to look at this thing, aren't they?
Yeah, exactly right. I mean, we have to. I don't think we can discount. We need to be very clear. This is a big week for Jackson Hole, right? The market's incredibly sensitive to what's going on with interest rates and inflation at the best of times, particularly now. So, and it's a very fragile moment. I can't really see any other outcome, quite frankly, than the market sells off, because Jay Powell is very dogged in his and that PPI print wouldn't have helped matters at all. So I think that although he's going to make it clear they are going to cut rates this year, I think the 3 rate cut thing that the market's got priced in is probably at risk if they listen to the detail of what he says in Jackson Hole.
Yeah, I think that was, it was all going so well, wasn't it? The CPI was perfect for him, and then suddenly that PPI really threw the cat amongst the pigeons. Was there any excuse given why the PPI was so high, Piers?
Not really. I mean, it was
just was a real number.
It was just a number. I mean, I suppose, yeah. I mean, these are all high frequency numbers, but I mean, it was a bit of a shock. I mean, the thing is with these numbers, these high frequency numbers, is they need to come. You know, you need to have 2 or 3 of them under your belt. So yeah, certainly stirred things up a bit.
Now, I know that you don't like UK stocks at all, but at the top of the leaderboard to performer in my watch list is of UK stocks, Piers. Nope.
Oh, okay. Okay.
I'll give you a little clue.
Go on. How's that? I don't know whether.
AJ Bar is the best performer today. Up in C.
Honestly, I don't even.
So you can tell you're in.
What's interesting in Europe, though, if you want to talk about stocks, one is Aden, which is the payments company, which everyone probably is familiar with, ADYEN, who had a major sell-off on their sales miss last week. They were down 18%, circuit breaker, minus %. So think about that intraday rally. Now they're higher. Look at that gap that's about to be filled. And it was just such a great buying opportunity because this is the only way to play. You know, they're still growing above 20%, which is a high growth, which is pretty much one of the only companies in Europe. Pretty much sort of same way to play the payment space in Europe.
Yeah, very much indeed. I haven't heard of that stock before, actually. There's another one that you've taught me.
Oh, wow. Okay. And the other one is, of course, Novo Nordisk.
Yeah, now take us through that.
Their pills, not only are they diet pills, but they're now, as we established last week, they're also reverse aging. And on top of that, they've now been approved by the FDA, the Wegovy, for liver disease, used in diabetes now, and there's talk of, and these drugs are kind of super drugs. Are at the forefront. Obviously, they took a massive hit for their profit warning, but they got massive sold. They've got so much, I think, in the hopper with regard to their drug, their product, their pipe, their property, but also their balance sheet to buy other companies. So I still, I just think the focus needs to be on.
Krona. So we'll see, of course, the US. I'm sure that'll be seen as it's FDA approved. What to look forward to this week? Been ticking along quite nicely.
Yeah, Marvel's one for me. I just kind of, I think you just got to hold it. You've got to realize what this is, right? It's got to just not really think too much about it, because if the market sells off, it'll probably sell off too. The radar thing, this stock, I think you need to take a 12-month view on it. So those who are listening and caring in this stock, just know that, right? This is not a trade. It's a buy and hold. This thing.
I was just saying it's X day for ADRs, as in, do they mean X dividends? We'll just get some clarification on that. But
yeah, I think that might be right.
And so then any view on Berkshire Hathaway? It's come off since the day after that. Obviously, Buffett announced his retirement. It's just been that slow, steady sell-off, isn't it? Let's see if producer Phil can pop up a chart of.
Yeah, well, I mean,
Berkshire
Hathaway. I don't really seem too into this, to be honest with you, mate. I mean, it's quite. I mean, on the reverse side of this coin, by the way, Berkshire piled into United Health, as you probably know, which is why that stock moved so massively. And by the way, that's also part of this rotational theme that I was talking about. That's where some of the big money's now to. Some of these beaten up healthcare is the number one topic on Wall Street right now, okay, because it's massively underperformed. These are big liquid names that usually are part of people's benchmark and portfolios. People are massively underweight, and the question is now, where are these long mutual funds and long onlys, passive and so bigger, more value orientated money? Where's that rotating to now? And that's the debate on Wall Street, and obviously Berkshire Hathaway buying United Health has shone a light onto that one. I know you've got some viewers who were asking about United Health the other day. said then, I'll say again now, I don't have a particularly strong view on it, but it's a high quality company. As we, there's moments, when these things get sold off on, there's nothing structurally wrong with that company. So it's probably why they're getting into it. But yeah, but I don't really see too much about it. I mean, it's below the 200-day. It's ground. It's sort of been slightly grinding its way lower, but it's a great example of what's not been bought in this market recently, right? This market is concentrated, the buying activity, and the likes of Berkshire Hathaway, the likes of United Health, the likes of IBM, etc. And IBM, by the way, is an AI winner, I might add.
Yeah.
But it's 5% from the highs, right? Just quietly whilst
Has it really? Wow, I had not noticed that. Now, where does Apple fall? Obviously now has started to move, but at 230, it's moved, or is?
I mean, my thoughts are, I mean, I had numbers to be better, and then of course we got some even better news than that with regard to the Trump love-in. And then I told clients that I'm going to take the win last Thursday at like $230. From a technical perspective, it looks like it can get to 240 quite easily. It kind of feels like it wants that too, but I'm not. There's a lot of question marks that need to be the questions that need to be answered. Number one is, what is their AI strategy? They've just come up with a whole bunch of new products last week, so they are doing things there, but the market needs, and the market also needs to be, this whole we've got to remember is that everyone's negative on Apple, right? I speak to maybe 4 or 5 people about it last week. They're thinking about whom are trying to construct a portfolio, and they're like, no, definitely not putting Apple in there, right? So that's the vibe. And you've got to be careful with that, because that's powerful if they have good news. Very powerful.
Oh, definitely.
And so and you don't want to be shorting Apple when everyone else is negative on Apple. I made a bit of money.
Of course, in options land, we have the luxury of selling puts. So,
The index, right? That just the simple fact that people have to, and when I say have to, these situations force people to participate, right? You have to bring it from, if you're under, you have to go weight or overweight, right? And that is that's a mechanical passive process. So, and given the size and importance in the index, it's like almost a foregone conclusion that when that button is pressed, when the market agrees that it's no longer an underweight, that's 10% on the stock higher, without and more,
and they start buying. It opens up 6, it closes up 10, and then they're buying for another 4 days afterwards.
Yeah, exactly. And then it's become a different thing, and then potentially the machine. So all these Mag 7 stocks, right? The one I'll take. 6 weeks ago, 8 weeks ago, we were all talking about how Google was, how Google, and I remember I came on the show and we talked about this. This is now the number one stock.
Yeah.
Completely, and wants to apparently bid for Chrome, which is obviously, the whole breakup story with Alphabet is still an open question, but obviously it goes without saying there'll probably be a bit of a bidding war for Chrome, but nonetheless, from being dead money to now being the hottest of the Mag 7 stocks, about to make an all-time high.
Right, Piersy, it's time for me to the very capable hands of Angeline. Going to have a catch up with you on some of her, and then you guys are going to do all sessions. Great to see you, my friend, and great to see Mike Reuter as well.
He's very happy to see you, no doubt.
Right, quick break, and then Angeline will be back with Piers, everybody.
In the last video, we talked about earnings per share, using pizza slices to explain how much of a company's earnings share that you own. But today, we're taking it one step further, and we're using EPS to calculate the PE ratio. And this will help you understand what a share price actually represents. Stands for price to earnings ratio, and it's one of the most widely used tools to measure valuation. But what do I mean by that? Valuation is essentially the price. Is it worth it? Whether you're buying a house or shares, sound crazy, but a share price alone doesn't tell you how expensive it is. The valuation. Now this is the important part to get. If the EPS is £1, then how many blocks of earnings am I willing to pay for a share? What's the right price? Is it 12 times or £13? Or if our construction company's PE ratio is 14, that means investors are paying 14 times the current earnings to buy a share company. So the share price is simply 14 times or 14 blocks built on top of each other. Now, why have I chosen 14 times? Well, that is actually the price of the FTSE 100. Adding all the profits together of the top 100 British companies and then dividing them by the number of shares, we can say the FTSE 100 is trading on a PE ratio of around 14 times 24 earnings. Now that looks fairly cheap relative to its own historic PE of 16 times. Now the PE ratio can be seen as a snapshot of investor confidence. A lower PE ratio might suggest that investors think the company and their profits aren't growing very fast, while a higher PE ratio often means investors are expecting big things in the future. Now let's compare our British construction company, or the FTSE 100, to the S&P 500, which tracks the 500 largest companies in the US. Now, its PE ratio is currently 24 times earnings. And that means investors are paying 24 times this year's earnings per share in the S&P 500. And you can see the difference right here in that valuation. That's very expensive relative to its own historic value of only 18 times earnings. But here's the big question. Why is the S&P 500 trading so much more expensive than the FTSE 100? Is it overpriced, or are there other factors at play? Well, that's what we'll explore in the next video when we look at something crucial, the earnings growth.
Hey, trader friends, welcome back. And it's myself and Piers. Piersy, how are you? Good to see you. We all thought about you on Friday when that big move down.
Yeah, well, I'm not sure if I'd call it a big move. Only a start.
It was a
wasn't it?
move.
I mean,
Yeah,
the most important of the price action, of course, because the last 3 days in a row, guess what, has not had a single bid. Palantir.
Mm. Yeah.
So that makes, because for obvious reasons. So we'll see how today. Yeah, it's going to be there is pretty significant evidence in the last price action, which obviously was accentuated on Friday, post the PPI that we got on Thursday, that there is some selling going on in the very exuberant parts of this market, and some of that money is rotating at this stage to some of the more value orientated parts of the market. Whether that healthcare is obviously one of the most unloved parts of the market, which is obviously an important part of the index, and there are lots of people who are now rotating into that part of the market. United Health being the leading name, of course, with Berkshire Hathaway buying a stake. But it's an interesting moment. If you're trading markets at the moment, you've had a great time making money out of this momentum in tech. As I've made clear for weeks now, I've definitely not chasing it. Nvidia is a sell, Palantir is a sell, AMD is a sell. I'm not buying any of these things up here.
It's a strange moment, isn't it, what we're seeing in the market where the longs have worked, but now we're seeing this very early signs of return. 100 for our trader friends to look at. This is daily chart there. But as you were saying, we haven't seen yet, some of this action move into the consumer discretionary and the healthcare names. But look at United Health. I mean, we had, I think, Monkey Man talking about health on Friday. We also had Pelican as well. Pelican, I know that you were very, very excited about United Health. Filters to see what are the likely big movers later today. And it looks like some of the top gainers pre-market in terms of, this is according to volume, are likely to be United Health again, Microsoft, Nvidia, and Apple also look to make big moves.
forward to what we saw on Fridays. All the I would imagine all the big AI winners. Let's just boil that down to the big three: Microsoft, Nvidia, and Palantir are all probably going to be red, and as will probably lots of the other expensive pockets of tech. And then the likes of IBM, the likes of, and then Eli Lilly, the big healthcare names that have been sold off will probably be green.
Yeah. So Nvidia, it's exitive. Yes, the ADR is, but also take a look and keep an eye on spot. Well, NextEra Energy. Those of you who are and Chevron as well, looking like potentially when the oil sessions start going. Some of the interesting stuff. Are we all continue now, or do you think we have further downside to come? Yes.
I mean, as I just said, my expectation is that this rotation, the market can attempt to rotate into the healthcare and to the slightly less loved parts of the market, but unfortunately, the weighting of these stocks to hold the market up. So we need if Microsoft and Nvidia, just those two stocks alone, decide to go down, that's 15.5 of the index, and that's just right. So throw in the rest of them and the software space and the semiconductors, and you've got probably 50% of the index if you throw in banks as well. Here we go. We've got all sessions up in front of us. IBM green.
We're not. Yeah, here we have a of the there. So the winners list is up. Right. So let's have a look. So we've got Novavax, new high, but let's the tech names we were talking about here. United Health, as we called earlier as well, likely to move higher, as we said. But let's have a look at some of the big tech ones that we talked about earlier. Let's for some reason likes a capital M. And that is down slightly there on the all sessions. This is the daily chart there. Having a look at Intel as well. I know you talked about Intel earlier on. It is down 0.5% there as we speak, all sessions. I'm going to go on to the losers list of the all sessions now that it's shaken out a bit. Take us through some of the losers there, PSE.
Right, what have we got? There we go. That's all pretty rational. Mara Holdings, which is one of the big exuberant Bitcoin miners, bearing in mind the crypto. Listen, find the pre-session boards for every when I'm looking at Bloomberg or whatever it may be. It's in a market we're in at the moment. Some of them are not. So, but I think just look at the key names, the leading names in the indexes, which are over and are crowded, and they all should be through those. Goldman Sachs, tick. Palantir, tick. shifted a lot, right? We've seen all these names I've just mentioned. We see them up every single day for the last God knows how long, right? They close, and now we're ready to get pre-markets. And I just think this has been. Look at Palantir. There we go. This thing is hopefully going to get slaughtered. Happening right now. There's lots of little as well knocking around Wall Street where people are coming out saying, "Good Lord, Jim Cramer, you should be fired for trying to pump this stock up to 200 for no reason." And all these kind of little bits. The tone has shifted, right? We went through a time where there was only bear bulls, there was only bullish action, and there was and all the bears kind of just sat back and didn't say anything. And Dan Ives actually said that. She came out and said the bears are hibernating right now, which gave him a little bit of a hedge to his call, if you actually think about it. But we'll see. But it's pointing in that direction right now.
Yeah, and it does feel different after Friday, doesn't it? Now that we've seen a bit of that reverse, as we always say here, trees don't grow into the sky, and the same with north. So this, some of the other movers that I just want to quickly check on as well. So looking at my filter here next to me, looking at ExxonMobil, because they had a statement earlier on about some issues, heavy rain, but that does not look like it has moved it at all. Good. We're seeing quite a few moves in Turkey, which may be sort of a default play as we wait on the talks to resume in Washington. We got the Europeans, of course, Merz, Macron, start today. There's no guarantee of any deal at the moment. In fact, many out there saying that it's unlikely that there will be a deal anytime soon, because Putin does not. One thing, Putin doesn't like being. It's already been pre-agreed at the weekend, and this is just the process of showing that they continue to talk. Remains to be seen. Just taking a how they're shaking out at the moment. Looking
other markets are going to be able to muster any more upside right now. I mean, there's the likes that there's been a lot of jostling on in and some cooling down, some much needed cooling down in a lot of these. So some of the valuations and the expectations that were built into Rheinmetall to get excited about it, but then there comes when the bid disappears and some reality of what. So the markets that have not been exuberant are the ones that are going to act better in these coming weeks, in my view.
Yeah, when the penny drops. Expected talks. Great talk about, of course, Jackson Hole, which you talked about with Rich already. Just some of the individual movers. We spoke about Nordis, which I still have a position. Held onto my position. Is this move as well of that serious liver condition drug. I wonder if you've seen those statistics coming out on the GLP-1. I mean, like, it cannot do. apparently it now sort of cuts your appetite for and things like cigarettes.
Yeah, I mean, listen, I mean, it's almost too.
Next thing I'm going to hear is that it promotes male hair growth.
Well, yeah, I mean,
it's almost like that's not true, by the way, trader friends. I'm just saying, GLP-1 just seems to keep delivering. Can treat.
And Alzheimer's has been thrown into the. I suppose I don't take a lot of it although I'm not sort of disagreeing with or not necessarily not believing what I'm reading, but it all sounds a little bit far-fetched if you ask me. But nonetheless, it is it's very clear that this particular drug, which was used for diabetes, has been morphed and it has these. And yes, it's now a competitive landscape. And yes, the growth rates are nowhere near where they used to be, but they still have a significant runway of growth ahead of them, plus a fantastic balance sheet to be able to buy other companies and pivot. And last week on an IRS 18, you know, as if they were going out of business, is a classic example of a very and then probably one of the most excited. I don't often get excited about European stocks, but growth stock, it's a global, which I like, and three, it's liquid, and four, it's massively oversold. So that always attracts me to something.
And those of you liking what you're hearing when you hear Piers speak, Viking Therapeutics, you have with me last week saying that if you truly believe GLP-1 as the wonder drug, Therapeutics, which is much smaller, not sure. Here's the chance that Viking Therapeutics much smaller and developing a Wheeler from Shark Capital liking it also because it is very small, which means it's a light for those big pharma names like GSK, and AstraZeneca.
Same goes for Structure Therapeutics, by the way.
Piersy, always a pleasure having you on. What's the rest of your day looking like?
Yeah, not probably quite. Imagine everything's a little bit ho hum until we get Jackson Hole.
To see Jackson Hole. What is not ho? What's coming up next? And it's Axel Rudolph with Technical Analysis. Speaking.
Hello and welcome to Technical Analysis for Pros, where we're looking at 100 chart here to look at orange line, and in my what I use is the 55-day simple moving. Now a lot of people use the 50-day, the 100-day and the 200-day. I prefer to use 55 because it's and I also look because it's something that everybody looks at, even fundamental analysts, as a proxy for whether a market or an asset class is bullish or bearish. If it's above the 200-day simply moving average, that's considered simple moving average, the 200-day, then it's considered to be bearish. Now, what I use the is for simply as a smoothing tool to see in which direction the trend is heading. Looking at all these gyrations of a candlestick or a bar chart, just look at a moving average. Pointing down. We know what I want to show you here. Averages, and use the 55. You tend to find support. And you can see here on the FTSE 100 chart, on the daily chart, we had that back in January of this year for simply moving average, which acted as support. Hello and welcome back to Trade of the Week on Monday the 18th of August. I would like to go short Euro Swiss franc this time, and I'll show you on the chart why. It's a purely technical setup, but basically what you can see here is that we made a higher high, and this higher high here has not been confirmed by a higher index. You can see here we've got a lower high on the RSI. And this is called negative divergence. And when they at least short-term lead to a trend reversal, put on this trade. We times in the past, you can see here in late April of this year, was made a similar area, and then also these highs here early September of 2024. All of the euro, for those technical reasons, with stop, what I would like to do is go short Euro Swiss. And then how far could it fall? Well, if it comes back down, if we're just range trading, and we could, I don't know, say 93.20, or setup is pretty good. So this week's short Euros Swiss franc at around C, and a downside say between 93.14, 93.20. But let's also quickly add the trade of the since then has that one a lot to just exit that. So that one we just week we went short 175 troy ounce. That one I would like to exit in a few days, so that one you can also exit. And the week before, last week, Chris Beecham had a brilliant trade on going long here on Monday the 4th of August. That one hit our upside target at 6,400. So if you're not out of that one there, then perhaps it's the for the last 2 weeks, just for those of you. Again, I mean, if you look at the VIX, you can see here on the daily chart that we've been bobbing along these lows, are heading higher again. Now, that in itself doesn't mean much. If you look at that, and you can see here line, that in itself doesn't mean much. But also, if you look at where we've been trading recently, just bouncing off the sort of 18 mark here in late July and again last week, it is possible that the VIX is in direction. But what we need to see is that Thursday of last week, and also above this downtrend line I just drew on. And if that were to happen late July, equity markets were to come off, as is the case with cryptocurrencies, we also, but I'll look at those in more detail also with regards to charting crypto on Wednesday. But if you look at Bitcoin, for example, Bitcoin has come off as is currently breaking through its April uptrend line, so perhaps some going on there, and perhaps something similar might happen in equity indices over the coming days. Now, these are all projections of something that might not happen, because after all, the Shanghai index earlier this morning nearly hit a 10-year high. We had other Asian stock time record. Yes, European, we'll have to see, but for the time being, I mean, we're trading close to markets in European markets and in Asian markets. So for the time being, things are looking still very positive. But if it were to happen, who knows what Jackson Hole will bring later on this week. If things do shift, then perhaps the VIX significantly again. That's S&P 500. Now, why am I getting slightly more cautious? Well, if you look at an 18th record high this year, and on the S&P, we're not far behind that. You can see here that we made a higher high to the highs seen in late July. So that's all looking. It's become smaller, and actually is making lower highs, which don't confirm these higher highs that we've seen on the price charts. Above the last. First of all, at 6,211.97. As long as we stay above, you can see here that tie in with that also here going mid-July, let's say at 201. As long as we stay above the 6,200 area, we're still bullish from a medium-term perspective. But if we were to fall through that area, we could charts, because short term at least we may be in a situation where we may false breakouts to new and then a reversal, because basically there might be no more catalyst left, as Pierre said just before, for markets to go higher, at least in the short term. For example, the Nasdaq 100, you can something similar. Again, as I said, 18th all-time high made on Wednesday of last week. And now here, if we redraw our line, you can see that, yes, we're losing upside momentum, but the trend is still clearly bullish. So as long as, again, we stay above low here, which was made at 22,670 or so, and these lows going back to mid-June, let's say down to 22,580. As long as we stay above there, we may, whether the uptrend, the medium-term uptrend remains intact. But can you also see that here, if they were to be taken out, then we would probably to all this area here where we made the highs back in this. Yeah, that's a really good support area, which tested if we were to form a top here and come off. But we don't know yet, but we can still see. Just be careful, because what we could see is just sort of sideways consolidation out basically at the beginning to mid-July, and then we still headed high and made new record highs. But it's also possible that we might, because of the negative divergence, turn around. But in that case, we would have to fall through this uptrend line, which comes in between the April and August lows. And at the moment, that can be seen around 3,530 or so. So markets closely. Now, let's see whether I've got any questions here from anyone else. Chesnara, let's have a look at Chesnara PLC. Here we go. a stock which has had quite a, but since then has had a very constructive up move, as you can see here, just grinding higher, continuing to head higher today. Right now, for me, short term still looks positive, as long from Wednesday of last week. As long as we stay above there, even short term, the trend as your friend is still pointing higher. We'll have to see where we are on a longer term perspective. So we failed, which is interesting here at the beginning of July, just around the resistance area going back to April of 2023. So that, with the high we saw in July, is the next upside target if you're long. If we break above there, then if you've got the weekly chart, we could see an extension take us all the way to the highs seen back in August of 2022. So in this case, at around 332.76 on this. If you've got big moves to the downside, and then even if it takes longer to come back up again, because quite often down moves are quicker than up, that is still very constructive. You saw this here happening basically at the end of March, and then since April, nice up move, and now here the same thing happening again. We went down and now we're back up again. And the fact that we also held here in early July above the low seen is positive momentum taking us to this resistance area. But do look at what happens in the next few days, because you can see here you've got all these highs here going all the way back to late last year, which may act as resistance together with these two levels are just April 2023 high and this year. So we might lose some upside momentum, but short term, that stock to me still looks bullish. Bond futures, bonds and rates. If you look at John, but you need to tell which bond futures you would like to look at. ZB. Okay, thank you, Hamish. Let's have a look here. No, bond futures. So if you look at the German Bund future, for example, you can see here that we've been coming off. We're support. It's really not to say. I mean, as long as we hold above this low here at the mid-August low, we could bounce back. But otherwise, we're still sort of in a medium term or short term, at least, downtrend with regards to the futures contract. We haven't got much data on this chart, so let me just try and find another one. Let's look at the US ones, for example, the 10-year notes in the US, and you can see here that basis we are coming off the highs we saw on the future a few weeks ago, and we have a similar picture here with regards to the yields short term, the futures at least short term here holding. We're seeming to be heading back up again. See that from a futures point of view, these are the 10-year notes are still pointing higher. In the if you're long the futures contract, short the yield, then perhaps look at because that's the last reaction low. As long as we stay above there, we could at least in the short higher again on the futures contract, so yields down. But if that were to be taken out, then things might change and we may actually come back down again and retest these previous levels here, going back to July and also the 22nd of July, and then these highs here going back to late July. Another possibility. Now I've got another question on COBP. Let me just have a look at that. COBP, can you, pardon? PB. It helps if I can spell correctly, Wisdom Tree Copper. Well, I mean, Trump tariffs, so what else can The copper price, if you look at it, we are now just holding above this support. We're just very, very low volatility, nothing much going on. These lows here you can see tie in with the lows we saw. There is much to say because lows going back to November of last year. Big support area around current levels, or just slightly below current levels. As long as those hold, which should be the case unless something dramatically I say we might bounce back short term a little bit. We've got a lot of resistance here. Can you see back to December of last year, together with the lows going back to the late January lows, and those should have as resistance, so that are basically tying in with this high here, 3046-ish. So 3040 to 60, I think, is a pretty good resistance there. In the short term, we're just going to trade sideways, and support probably holds around the support area, but there's nothing much to say. We're just now Zscaler as one. Zscaler, the well, let's look. If we don't know, let's look at the longer term. You can see on the monthly chart, we can see that we've had an up move, a down move, an up, down move, sideways trading. Now, since April, a positive failed here. Monthly candle. This month is bearish momentum, but we are getting buy support. Can you see these highs going back to April of 2022? 24. These with the low going back to October 2021. So this lows, previous highs, see whether they come close together, and if they do, that's a support area. So basically, we're talking about a support area coming in on the daily financial bit around 25,954 and 24,000. Which was made here 2,584. Now, if we don't fall through last week's low, line, and in the short term at least break above the last reaction high. That was Wednesday's high here, 28,027. So I would like us to see a rise above this relative high, and then a rise above this resistance line for us to head back up again. So how far could we then head up with regards to Zscaler? Well, you've got a lot of resistance. Can you see all these highs here going back to, let's say, the middle of July? That may act as resistance. Let's say around the 29,190 to 29,000 area, and this would need to be overcome for us to be heading back up again towards the previous high. So medium term, if you just look at the chart and don't want to sort of forecast anything, we are in a down right now. We don't take out these previous highs, may actually slide further towards that the support area I just mentioned much further. Novo Nordisk, because that was mentioned. Let's just look at that and look at the chart here. Let's look at the longer term. So I think Pierce said it was, and yes, if you look at the relative strength index, we traded at levels last move. So is definitely the case. We are oversold. Upside. a previous support? Well, we sort of held here. Bouncing back on the monthly chart. Look that constructive to me. Why? Because we've had sharp long candles sort of grinding higher. But can you see here that low was lower than the previous low, and these lows were had an early warning signal that perhaps we could the late April lows here. That area here could act as resistance. So we're talking on the daily financial bed between 5,700 and 5,900. That could be resistance. As long as that caps, the downside is still dominant because we've got a series of lower highs and lower. If we were to break through that resistance, the next resistance area would be these sort of mid-May lows here around 100, and then the next 1,400. But to go back up again, it would probably be very gradual and take a lot of time. For those who are short, well, your stop loss $1,200. Then you need to ask yourself, is this just an A, B, C correction? In which case we could probably top out at these resistance. So maybe what you could take and right now for Novo, that's still point. Charting crypto.
What is going on, everybody, and welcome back to Risk and Reward with Gus and E. Today is Thursday. We got one more day of the week. We also had the open house today. That was a pretty good time, wasn't it, Gus?
Yeah, it was awesome. Getting to meet everybody and finally put some faces to the names that we're seeing in chat all the time. Yeah, it was excellent. We have our live event in Chicago tomorrow, which I am getting up bright and early for. Let me tell you. And yeah, looking forward to that. It's a fun week, a little bit chaotic week, but you know we like to bring the chaos here. The fun comes with it.
Exactly. You thrive in a little bit of chaos. It makes things a little interesting sometimes, but no, it was a really good time today. Really nice to walk around, meet everybody, and really just game plan for tomorrow. I haven't actually been physically to the live show, so I'm actually really looking.
Yeah, this will be my first one as well. I've done lots of the pre-recorded stuff that we shoot over at Live Bash and all that good stuff. But I've never been to one of these live events before. Man, I've only been here 6 months, so
looking forward to it.
It's going to be exciting. Yeah, I'm not looking forward to that alarm tomorrow morning though.
No, you're already thinking about it, right?
Bro, I got to be there at 6:45.
So what? That means you got to be there 6:40. So you got to wake what?
5:45, 6. Something like that. Yeah.
Things are prepped the night before.
Yeah.
Cool.
Yes.
Yeah.
But it's gonna be a fun time. I'm looking forward to it. I'll tell you what too. I just before we started, I got a notification from DraftKings. Okay. They say they have a pick for the Diamondbacks Rockies game tonight. Guys, PSA: if your sportsbook ever tells you should take a bet, run the other direction, please. Okay, that's all I got on that.
I hear you completely. Again, Colorado Rockies. I'm a Colorado guy. I got to put my input.
Boy, are they terrible.
Bro, I could as I'm lining that up, I'm like, they didn't give me much to work with here. I haven't really been watching the Rockies since the Matt Holliday days. I don't know if anybody remembers. Shout out to Matt Holliday. But anyways, as we get into the segment for today, UNH, that's always been the talk of the town the last few weeks, especially with Luigi, the shooting with the CEO. We'll give a quick update and a rundown on all of that. But we had some pretty big moves in the after hours. What happened in UNH, Gus?
Yes, Berkshire Hathaway has announced that they have put their hands on some UNH, $1.6 billion of UNH to be exact. They are essentially just buying a large dip. And let me tell you what, I beat Berkshire Hathaway to this sentiment. I bought before they did. They disclosed that they added this position at the end of June. And Errol, what a luxury it must be to be a Berkshire Hathaway, a Warren Buffett, a Peter Thiel, and just be able to say, hey, by the way, guys, I bought this, and then it is immediately.
It just goes up.
Yeah, you just are right. Yeah. You are right just by telling people that you did it.
And you know what's funny? I mean, Warren Buffett and some of these guys have really solidified their name in headlines and just getting buzz. Because I think about Elon Musk, seeing those tweets, seeing what Elon eats for lunch, seeing that move the market was so profound to me. I thought it was insane that an individual could affect the overall market or his specific stock, especially because it's such a massive underlying. But Warren Buffett isn't somebody that tries to stay relevant. He's not right.
And he's left Berkshire Hathaway.
Exactly.
Yes.
If anything, he's trying to really go into the shadows, and we're still seeing his names in these headlines. I don't know. What are we still trying to milk these headlines while he's still around and relevant? Whatever the case might be.
Well, I'll tell you what. As somebody who just moments ago wrote Warren Buffett's Berkshire Hathaway on this slide, I am absolutely trying to milk these headlines. It's what you must do.
Like, at me, bro.
You got to play the game.
Yeah, but the fact that we still think about Warren Buffett and by him making a big purchase, it's still a big deal to us, right? Elon Musk is on Twitter. He owns Twitter. Elon Musk is a little bit of a character, so it's not a surprise he's able to develop and continue to grow his personal brand because it's Elon at this point. Obviously, he's going to have the confidence to do it because when you're the wealthiest man in the world, you're going to go out there and probably say whatever you want to whoever you want, however you want. But again, Warren Buffett is in the shadows, and his name's a massive deal, especially for whatever he's putting his money towards.
Yeah.
So
yeah, it's very interesting. I think Berkshire Hathaway and Tesla stand above all others in that you are buying the man,
right?
When you buy the company, and I mean, like Tesla will move on SpaceX launches and like all these other things that Elon is doing, and it just is very interesting sentiment and vibes. But yeah, let's get into it here. This is hot off the press, guys. They just disclosed this position after market close today, so we'll catch you up a little bit. So yeah, UNH having a bad year, 46% drop in share price year to date. It was more than that. Just a few weeks ago, they've been gradually climbing up a little bit. They issued a dividend recently that gave them a small bump. Lowered profit forecast, billions in expected additional costs, ongoing federal investigations, fallout from a cyber attack, and reputational damage from a high-profile executive murder case, which, yes, their CEO was assassinated. That was the first part of this issue. And then when literally the very worst, most parabolic thing that could possibly happen to your company was going on, all of a sudden the government was like, oh, man, there's regulatory concerns here, which sent UNH down even further. But the reality is that and my sentiment in getting involved with UNH, 2 months ago now, was just that this company isn't going anywhere.
Right.
They're still strong. It's turbulent and it's turnover, and they might have to pay some fines, but eventually it was going to return to those higher highs. I was never expecting a catalyst like this. My sentiment the whole time was I took calls 18 months out, and I was just going to wait and let it slowly creep back. Good gamma. And now, suddenly I've gotten a huge bump.
No,
so.
I mean, especially with a case like this and somebody like Warren Buffett. Warren Buffett is known to be a very investor savvy, very kind of safe, kind of I make smart bets kind of guy. And he's kind of known for that. It's built into his brand. With all the chaos that's happening with UNH, it's like, wow, Warren Buffett's getting involved in this, and this seems so chaotic, and it doesn't seem like Warren Buffett typically sides on the air of chaos. So for him to get involved again, kind of surprising to me, but exciting to see the stock pop off over 20-something points. So, I mean, if you were short, I'd be patient on checking that portfolio in the morning, but I mean, if you're long, definitely go check it out right now.
Well, yeah, and it's very interesting because, I mean, I think Warren Buffett is arguably, if not just certainly, the greatest investor of all time.
He's like the Michael Jordan.
Exactly. And with that must come contrarian sentiment a lot of the time. I mean, you're going to have to be contrarian pretty often to be as good as he is, and this is about the most contrarian thing you could possibly do right now. Nick Batista described it as a deal with the devil on an interview that I did with him for TikTok, and it's true, man. Buying UNH right now, it does feel like making a deal with the devil. Everybody hates this company. If you're talking about in the market, everybody hates this company's performance. Outside of the market, everybody hates this company on morality. It's a bold move.
I mean, I think it's an interesting one, and we can go ahead and jump to the next slide here. But also, I think it's funny by how sometimes our own individual biases can absolutely sway financial decisions and in terms of what we want to get involved with. I think we were talking on that topic, I think earlier the year with the whole fiasco with Elon Musk. Elon Musk kind of started to become more of a controversial character. It's almost like he stepped into that role. There's no way he's not smart enough to think about that's the role he's stepping into.
Elon Musk, he tests the limits of no such thing as bad publicity.
100%. And Elon Musk is so calculated with everything. Everything he does, I'm like, he had to have thought about the potential outcomes and scenarios of this. There's no way he just did something off a whim.
You guys, Omaha, and you guys with this HIMS conversation in chat, this is making me laugh, but I can't read any of your things out loud. This is UNH's price action since this news broke. This is all aftermarket today. What is this? 1 minute candles?
1 minute.
Yeah, 1 minute candles into market close today.
I'm sorry. This might be the 5. We'll double check on that, but it's an intraday chart.
Very short time frame.
It's an intraday chart.
Yeah, I mean, you can see the furthest time we can see back is 9:30 a.m. this morning. So this is today's 5 minute chart on UNH. Can you guys look at this chart and tell me where in the chart you think Berkshire Hathaway disclosed their holdings of UNH? I know it's really hard, but I really believe in you guys. We have a very smart audience, and I think you can probably figure it out. Big move up for UNH. It's just continued to climb. I think it's reasonable that this thing opens over 300 tomorrow. It's the title slide says it all. Midas has touched this now. It is gold. So I think everybody's going to be scrambling to get on that train. Fortunately, I booked my ticket 2 months ago. Tell us the timeline.
Just a little bit of a timeline and context. I can't even believe this was in December. It feels like it was just a few months ago. But December 4th, 2024, right? We had the United Healthcare CEO Brian Thompson. He was shot in the back of the head. I think we had a little bit of that video footage that was going around, but that was in December. Feels like that was just a few months ago. I was going to say the opposite.
That feels like forever ago.
Doesn't that feel forever ago?
Oh yeah,
it does.
I mean, it's just, and that's sort of just a personal thing in my life. It's like, if you talk about events that have happened, like in my life, I was in college finishing up finals around this time, and I have graduated, went to South America, moved to Chicago.
You're a local now.
Yeah, so it's a lot can change. A lot can change in 8 months. It feels like a lifetime ago to me.
It's a fast timeline within this timeline right here. So
thank you, Theta Trader. Line go up, Gus. He says, Kirk, that is absolutely right. Ding, ding, ding.
December 9th, just a few days after, Luigi was arrested in Pennsylvania with a ghost gun and a suppressor and a false ID. It always blew my mind when I learned about the black market for the first time, and I heard you could hire like hitmen. You could buy this, you could buy that. I mean, certain organs. Pretty much anything you could.
Anything you could. People. Anything you could think of.
I mean, quite literally. So he did have a ghost gun. Probably has to do with some type of black market of the sort. Early 2025. He was formally charged with murder, terrorism, prosecutors looking to seek the death penalty. Mid-2025 UNH stock declines amid legal, federal, and operational issues. Buffett quietly accumulates shares, right? He's somebody that does not do things for the attention. If he could backdoor his way out of everything, he would. He's very quiet. But August 14th, he's not able to be quiet with these footsteps because they have such massive position sizes that they're trading with. Berkshire revealed 5 million shares, 1.6 billion stake, sparking a massive run in the underlying after hours. So we clearly see the visual for that, Gus. I mean, I don't know. UNH feels like it was one of those underlyings people were figuring out how the market was going to digest this thing and how it was going to play out. And it feels that with Warren Buffett, kind of being the first one to be like, okay, I'll go ahead and do it. I'll be the one. It gives others the confidence to go ahead and start pulling the trigger and managing their positions however they would want to.
Yeah, obviously a very heavy thing. I don't mean to make light of it, but I, in a purely market context, was actually excited to get involved with UNH after the CEO assassination because fundamentally that doesn't change anything. I mean, you're going to have to find new leadership, which creates a little bit of turbulence, but it's not going to hurt your core business at all. But yes, the regulatory stuff that happened later on and drove them to even lower lows, that was a little bit alarming, and I think that at least for myself and I'm sure many others, that was what actually put them fully off of this stock. It's just this is too much stuff on fire for me to try to touch. But yeah, eventually I was convinced by the bad influence that sits to my right. That's not you on my other side. And got long some UNH, and I'm happy with it now. It's been a lot of pain. Do not get me wrong. Being long UNH over the last 2 months has been nothing but pain to this point, and I am down massive on the position. But we're finally getting a little vol spike here. Premiums should be juiced. The gamma's going to come into play.
Gamma's going to gamma.
Yeah, so I'm happy with it.
Yeah.
But yeah, last slide here.
the infamous
Luigi Mangione. Mangione, I don't know. I've actually never heard this man's name said before.
I think Mangione sounds about right.
I've just read it 100 times.
He's Italian.
Yeah.
So anybody else Italian want to listen?
Luigi Mangione. I wonder where he might be from. Yeah. But anyway, yeah. 26-year-old Ivy League graduate, valedictorian at his high school. He was apprehended in Pennsylvania. The assassination happened in New York, correct?
I'll double check on that.
I'm reasonably certain happened in New York. He had fled to Pennsylvania. They found him in a McDonald's there, which I always thought was an interesting little part of this. And it was because somebody in the McDonald's called in and said that he looked like the guy. Yeah, New York. But yes, he is alleged murderer of United Healthcare's former CEO, and they are seeking the death penalty due to the severity and potential broader threat to the healthcare industry. Morals aside, I can see why they feel the need to pursue the death threat here, because if you give him anything less, you're going to set the benchmark right here. For
exactly, he's going to be used as
CEO.
Absolutely, yes. He's going to be used as the example.
Yeah. So if you go too light, other people might see that as opportunity. So it's very interesting.
Yeah.
But yeah.
No, I mean, it's always funny seeing this picture pop back up, but at the same time too, I know a few months after that, he had released something along the lines of, wasn't there some type of eerie message that was left later on, like you will eventually see, or
he had a manifesto.
That was in the manifesto. Yeah. I think it was, right?
Yeah, they found him with a manifesto on his person.
Yeah.
I remember that got out. And now he manages to get like a lot of press from prison. I don't know who's doing all this, but like I've seen tons of like the letters he's written back out to people, the letters that he's receiving in there, comments from him from behind bars. I don't really know how they're making that happen, but
one thing that I think is pretty crazy too is like allowing, based off of what he does, like everybody gets to form their perception of this guy, right? But the thing is that, like, it's such a weird spot to be in, like allowing the public or allowing whatever, and celebrities have dealt with this and done this all the time, but allowing the public to construct how everyone and everything perceives you, So I always think it's an interesting thing when you do something to where you're not going to be able to really explain yourself. I mean, I guess that's why they have the manifestos and whatnot, but just having no control over his own narrative is just kind of a weird.
Yeah, and even with the manifesto, like, there's no guarantee that you're ever going to be able to like get that out. Like,
yeah, absolutely.
Yeah.
If anything, there could have been manifestos covered up that we've never got to see because of whatever other issues that could cause.
Yeah,
So.
Theta Trader, to your point, I also, and I know that this slide greatly contradicts that, I also wish that we wouldn't give these guys any airtime. This guy is simply so famous that I decided to just go ahead with this slide. But yeah, holistically, mass shooters, murderers, anybody of the sort, I don't think that we should ever give them a single ounce of airtime or oxygen. I don't think we should say their names. I don't think we should be posting their pictures everywhere. This is an extenuating circumstance, but I agree with the sentiment. What's going on, Luis? Happy to see you.
What is
By the way,
going
happy
on?
to see everybody. Big Deal, Lone, Theta Trader. Who else?
Emmett.
Who else is
Got our
here?
guy
Emmett. Kamal. Good to see all of you. Happy to have you.
I hope everybody was long UNH, and I hope everybody's been having a great week.
Jackie, I heard he wanted trial by combat. Is that true? Is that? Can we get a fact check on that? Somebody give this guy trial by combat if
Well, I
he's
mean, I
requesting
think
it.
we would have heard about his death if he was gone, so I think he won.
You think he won? Well, I mean, trial by combat would just be like, if he lives, he gets to walk.
Right. I think he could be walking.
I mean, I think he's they still got him though. he's
cooked. He's
still
He's
locked
for
up.
3.
Who do you even combat with? Who? I have so many questions. Who?
That's the last question you want to ask, and they bring out the guy that you got to call.
Yeah, he doesn't get to pick. Yeah, what if they roll out like Khabib Nurmagomedov and he's got to fight Khabib right now? Like, that's interesting. Trial by combat. Give it to him. Let's
Give it.
Just let the American public vote on who he's going to fight, and give it to him.
call it a-
Let's test the 100 men versus gorilla thing. Let's.
Perfect example.
Yeah, we need a gorilla. I think those are pretty easy to source.
Yeah.
And then 100 death row inmates.
Yeah.
And the whole issue with the gorilla thing is always like, oh, are they going to be trying their hardest? Like, do they have to kill the gorilla?
Yeah.
Let's get a bunch of death row people.
Yeah.
And they will try their
Well, I mean, I
hardest.
think naturally, right? Let's break it down. Let me just ask you right off the bat. I mean, 100 gorillas, or I'm sorry, 100 men or one gorilla.
Oh, the gorilla.
Okay.
Unless I could sit there and like
Regular size gorilla.
Yeah.
Average.
like a male silverback gorilla.
Yes.
Yes.
He's like, I just want to clarify, we're talking about
Oh,
silverback.
yes. The
You know what a silver...
the specifications are important here because
Absolutely,
it's a lot
absolutely.
of nuance. I think that
Okay,
there
let's hear
is a group of 100 men that could be compiled that could beat the gorilla, but if you randomly select 100 men from the Earth or the United States or whatever,
Okay, so
the gorilla's going to
So we're gonna have to use averages in this data set. Average 100 men, one average silverback gorilla. We're choosing the gorilla, even with like a strategic game plan prior to that.
Well, yeah. Yes.
Okay.
They get their hands and nothing
Okay.
else. They don't get any weapons.
Right.
So I don't really know how you're going to even damage the gorilla in the
Right,
first place.
right.
And your numbers are going to be ever thinning
Right.
as the fight goes on. I mean, there's maybe an angle of like if you just dogpiled, try to just do like
To overwhelm.
like an overwhelm situation. But even then, I don't think you could kill the gorilla.
I mean, if you can get the gorilla down on the ground, on its chest or its back or whatever, things got a chance. I mean, someone's going for the eyes, somebody's going for the neck, somebody's going for. Damn, I don't even want. I don't even want to put my hands near the face of the gorilla.
Well, yeah, the gorilla will bite your
You're
hand
in
off.
fight or flight at that point, and you're probably seeing black in that moment.
Well, yeah. I mean, my thing is like, what's the kill shot? How are we going to put this thing out? I don't think anybody can choke out a gorilla.
How strong is a gorilla's neck? Because it's like if you can get someone to just close off the airflow.
I mean, I think a gorilla's neck's got to be like.
It's got to be. Well, how thick is it?
I mean,
I just haven't done the research on the anatomy of a gorilla. You know, I would assume these are extremely, armored
what do we
gorillas.
want?
But
Diameter? 36 inches in diameter, like straight across. Like if you were to cross
a
section.
wide neck.
Yeah, I mean that's like.
Gorilla's neck is like 2.5 feet.
Yeah.
3
feet. 3 feet on
A
the
neck.
Yeah.
Gosh.
This is a big gorilla.
Yeah.
Yeah. So I don't know.
Oh.
We've gotten a little off track here, but
we'll catch up.
10 gorillas versus 1 orca. See, now what's the playing surface? Where are they fighting? Because the orca wins in the water. The gorillas are going to win if it's on land. We're talking about like a shallow pool situation. I don't know how we create a level playing field for those. 2 gorillas, 1 orca. Okay, we just went. Oh, you guys just made the same joke at the same time. Nice. Oh, I see what you were saying, Lone Sofa.
Literally at the same time.
Oh, okay.
Yeah, I'm still gonna go with the 100 men just because I do think it can get overwhelmed. I do think somehow, some way, we can close off the windpipe. But will we be able to do it long enough?
There would need to be coordination in a flood because if you let like 20 guys get offed first,
very well thought out.
Yeah. because you got one shot. As soon as the gorilla has like 20 of you dead, you're cooked.
Yeah.
You need the full strength of your numbers.
Yeah.
But yeah, I say let's get all the death row inmates, have them fight a gorilla. They get freedom if they beat the gorilla. If not, they are on death row anyway. And like pay-per-view. Let's stream this. Let me bet on this.
You know what's crazy? It sounds like it sounds so crazy, but this was literally happening 100 years ago, like 150. You know what I'm saying? These things were literally happening.
This is exactly what the Romans did. I mean, the Colosseum was just a bunch of prisoners that they made fight large animals for their freedom.
Yeah.
We used to be a proper world, man. Those were the days.
The days indeed.
Those were the days. You steal something from your boy, and suddenly you're fighting a lion.
Bro, literally. I mean, there was not a lot of stealing going on around that. But no, we are going to be coming to a close here. Really looking forward to the show tomorrow.
Yeah.
Anything else to add before we start to wrap up here? UNH on the move.
Yeah, UNH on the move. I am long. Genuinely, I think UNH, this is the beginning of the move back to like 400 or 500 levels. I think that the fundamentals have been fine this entire time. There's still regulatory uncertainty, which, uncertainty is never great. But I think that this is enough momentum to finally get a little bit of steam back into the stock and see what happens.
I agree. See what happens tomorrow. We'll be managing those positions. We'll be keeping an eye on the overall
excited
market.
to see you all tomorrow. If you're coming to the Chicago event, I will be there bright and early and for the whole time. Come find me, shake my hand, let's take a picture.
Absolutely, it'll be a good time. Everybody rest up. Hope everybody has a good night. Thanks for taking the time to hang out with us today. We will be back tomorrow at the live show. And we'll see you guys in the next one. Peace.
Inflation's not so bad, right? It's Thursday, August 14th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan on the road on the phone to join us for the next hour as we take us through.
This is called President Trump style, baby. Calling in.
Squawk Box. Ilya's our Joe Kernan around here. Please treat him as such. We'll be with you for the next hour till 5 Eastern, 4 Central as we wrap up the trading day. If you're on the platform Tasty Trade on the website tastylive.com, welcome. Come over to YouTube. Tell us what you think of this action. The sell-off that was sparked by price pressures going up. Does that mean inflation is coming down the pipeline for the consumer? Stocks take it on the chin initially, but when we turn to our charts, we see a recovery during the day. And sure enough, the S&P 500 here basically back to break even after a big sell-off this morning, getting down below 64.55. NASDAQ off by 0.25%, Dow off by 0.11%, the Russell, the big loser, off by 1.4%. It's a bad day for the cryptocurrencies as well, which are down 4% or so each. We take a look at gold and silver, which are sliding, but it's good news for the US dollar because higher treasury yields ultimately lead to a stronger currency. So as we break this down, Ilya, we need to talk about this inflation figure because the PPI did spook the market today everywhere. If it was stocks, if it was bonds at the long end of the curve, those never quite recovered. If it was gold prices or silver even, PPI comes in and the market gets weaker.
Yeah.
President Trump said that inflation's hardly here. Direct quote, said today.
Yeah, okay.
What's the real story here?
We've been talking about this for months, right? This idea that CPI is not an accurate reflection of what's actually happening with the tariff impact on inflation, not because the data is fuzzy, which it is. It's fuzzier than it's been in years.
Why
but
do you
that's
say that,
not
Elliot?
what's going.
Not to interject, but why is the data fuzzier now than it was a year ago?
Because we
of
have
the
about
lack of
30% imputed data in CPI. That's the highest in known memory.
Imputed
even
means
during
an inference?
Yes. Even in COVID times, it got to maybe 15, 20% while everything was closed.
Why is the imputed data so high at this particular point in time?
The imputed data is so high because they don't have the staff to collect it because a madman with a chainsaw
because they're not collecting it.
Because they're not collecting it. That's right.
And the imputation fall off starts in, or rise rather, starts in March, which coincides with Doge.
Yeah. Yeah. So, yeah, the data is fuzzy, but that's not what's going on here. What's going on here is in the first quarter, we had a massive jump, as we all have seen, in imports and in inventories as everybody was trying to front run the tariffs. In other words, people have built up these inventories to try to get as much as they can before things get expensive. And that's shielded consumers because inventories have these goods at the former costs. And until we wind those down, we have that as a shield. The other major shield that we've been watching has been wholesalers eating into margins to protect consumers because they want the tariff thing to sort of wash over them without destroying demand, because nobody knows what's going on with these tariffs in recent months. They're here, they're there. And so wholesalers make the bet that they don't want to kill demand by passing on these tariff costs. They want to eat it on their margins for a little while and see what happens. And that's been the story really going back to when we had a really massive surge, a month-on-month 2.1% surge in these costs, especially early in the supply chain, intermediate demand. So a 2% decline in margins there, going back to shock of shocks, April, when Liberation Day really hit the fan. What we see here now is that the pass-through is occurring. And that's what is so worrying about these numbers, these PPI figures. Month on month, there is a surge in margins for wholesalers. Final demand, a surge of 2%. That's the biggest monthly increase since March 2022. For intermediate demand, biggest surge in 4 months, 1.3%. What does it mean that their margins are increasing? It means they're no longer eating the input costs. They're no longer taking it on the chin. They're passing it down to consumers. We saw it in the CPI numbers a little bit already, and for the past 2 months. And of course, we've also seen it in spades in the second quarter GDP numbers, where imports stopped, essentially. They just hit a wall. And inventories have started to come down. That is to say, businesses are spending down these inventories. They're not restocking them. And so the one-time front run is done. Now consumers have to face these costs. Those same GDP numbers told us the first 6 months of this year were the weakest contribution from consumption since the first 6 months of 2020, the COVID recession. So we're already in a weak spot. And as we've seen with the CPI numbers, the pass-through is only just beginning a little bit. So we still have all of that in front of us. Now,
but the bottom line is, does this really affect Fed rate cut expectations? Really? I don't think it does.
It did a little bit today. The really interesting bit is I don't think this changes anything for September or this year. Those expectations still north of 90% chance that we get the cut. Now it's a slight possibility that we don't, about 6%. Yesterday, there was a slight possibility that we get a jumbo cut, about 6%. But the central idea that there is a cut of 25 basis points that's coming in September, that's unbothered. The biggest issue is what happens next year. And there, things got more dovish today because the markets see where the economic pain here is going to come. It's consumption.
So one thing that sticks out to me in the data, so now that we have CPI and PPI, right, we can basically take a look at PCE. PCE is the Fed's preferred gauge of inflation. If you take a look at the inputs, the head of fixed income over at the chief fixed income strategist, I should say, over at Janney, Guy-Labas, apologies for the mispronunciation, he imputes PCE, core PCE at 0.56% month over month, Ilya. That's probably not a level with which the Fed would be comfortable cutting because that gives you an annualized inflation rate north of 6% from how they measure it.
Yeah.
Here's why I can't necessarily take that at face value. One of the translations that Guy points out here is that investment advice, insurance, portfolio management are some of the largest drivers of why PCE is going to be higher. And that's effectively a function of the fact the stock market's up. So PPI being up for
Say that again,
chunk
why they're saying why is the stock market up? What are they saying?
No, so the way that PPI is measured, rising asset prices filter through into the higher cost of financial advice. So if equity indexes go up, then the cost input for receiving financial advice has increased. And when stock prices go down,
because the cost of financial advice is a ratio of basis points against the value of assets, basically. So as the asset value is higher, the cost of advice is higher because you're paying 50 basis points on the collective value of equity, or some number, an advisory fee on. Okay.
So, like, if the Fed is looking at this PPI impulse and saying, sure, there's a whole chunk of it here that's driven by things that aren't great, like food, for example. We now have a 9% effective tariff rate on bananas. We've really never, ever tariffed bananas before. Do you know why? Can't really grow them here. So there's no reason to tariff them. We're not going to incentivize American production of bananas or coffee for that matter anytime soon. But coffee prices have shot up. Banana prices have shot up. Food prices are going up. But when you think about everything that goes into the Fed's preferred gauge, you're not exactly landing in a place where, okay, portfolio management, that's why this is a big, okay, let's take a step back then. Will the Fed cut in September, Ilya? Probably.
Yes.
Should they? No. But our job as traders is not to make bets on what we think the Fed should do.
Right.
Because what the Fed should do a lot of the time is a day late and a dollar short. They're always fighting the last battle. What they will do is an entirely different equation. And I can't help but think that's one of the reasons why you have an S&P and a NASDAQ that are able to respond and rebound over the course of today's session, even if they're still slightly underwater here going into the close.
Yeah, I mean, I think the bottom line here stands. The markets want the September cut. They think the September cut is coming. They don't think this upsets the apple cart. The larger issue here starts to be, okay, you saw the jobs report was weak. Clearly. You saw the GDP report told you to worry about consumption. Clearly. You saw that same GDP report tell you that wholesalers were going to pass on these costs because they're not refilling inventories. So they find this stuff expensive now. Clearly. The question becomes, is the economy already rolling over and is the Fed already late? That's the biggest threat, really, because the markets have been saying for months that the Fed doesn't need to worry about inflation. And the Fed's concern, let's be clear, wasn't so much that we're not going to get a one-off uptick from these tariffs. Their attacks on imports, of course that was going to happen. Of course that's coming. 1 + 1 is 2. The larger question is, will consumers take that increase, extrapolate that out into inflation expectations, and thereby poison all of the progress that the Fed has made in bringing inflation expectations down and re-anchoring them through pain of significant rate hikes in 2022? And the markets have been saying this is the wrong thing to worry about basically since April, when the whole kerfuffle occurred. And you can see it because inflation expectations in the bond market haven't really gone very far, even as sentiment has recovered. So it's not sentiment about the economy that's recovering. The price impulse is still just as weak, pretty much, as it's been when we were concerned about the tariffs hurting growth February to April. We're still there. The question is the U.S. going to self-immolate and exit its own financial order and crash the whole thing? And the rebound in stocks tells you that we no longer think that that's what this administration is doing. And good.
You know what's really funny to me, Dylan? There's a word that we haven't tossed around here in a long time. It starts with a T. transitory.
Yes.
We're starting to see the contours of a certain group of people in financial markets make the argument that, yes, inflation's here.
But it's transitory, baby.
But it's not going to stick around, and the Fed needs to be more concerned with the labor market, in which case, that's fine. That can be your view. But you're arguing that the data that we've seen today and this week and in recent weeks of inflation nudging up is transitory. So make that argument.
So can I pick up one? I'll make that argument right now. Let's take Trump at face value. He has said more than once that the tariffs are actually not about. I mean, the tariffs may be ostensibly about sort of bringing production back to the United States, but I would say more substantially, what I hear Trump say is we should pay. We being Americans should pay lower income taxes. There should be a lower general average tax rate on income and on capital, and that we should gather our tax revenue via a different mechanism, which he believes should be done through tariffs. And so the question to the transitory piece is maybe the hypothesis would be that the Trump tax bill is a move towards a reduction in taxes on capital and income and an increase in taxes on imports. And that you're basically that it's not so much of a reshoring or not reshoring, although there's some marginal aspect of that, although obviously not with bananas or coffee, but that bigger than domestic production versus foreign production, that it is a philosophy on tax revenue collection, full stop, that is to put more money into the pockets of Americans by way of lower income tax and lower tax on capital, and then take more money from Americans effectively when they buy foreign goods by way of higher priced foreign goods. And so the question would be, is the transition to higher taxes on Americans when they buy non-American items, French wine or German cars or, whatever, bananas from South America, what's the net effect of the marginally higher prices on any foreign good relative to the increased accumulation or retention, I should say, of income by virtue of a reduction in income and tax and capital gains tax? One would, if you believe that whole thing was going to shake out, which seems to be a tenuous belief to hold, considering how many moving parts and how much money and how many people and how sort of asymmetrical and selective and targeted and preferential to his friends and all these things. But one could argue that it's transitory because while the cost of foreign goods will be higher, that the amount of money in an American's pocket will go up by virtue of marginally lower income tax. And if Americans buy domestic goods with their increased retained income, and then they pay more for foreign goods, that the tax rolls work themselves out. And in the process, also, you end up with a bias towards buying American and reduced overall tax rate on income and capital.
I see the argument, but to me, it seems like a bad one.
Why?
Because you get a tax reduction once a year. Meanwhile, you're facing the costs of these inputs every day. And it's not just bananas. Let's say you stop eating bananas, whatever. But there's inputs to everyday items.
I will not be stopping eating bananas, for the record.
Neither will I. But the obvious decision not to buy foreign goods is not so obvious, because foreign inputs are in almost everything, including, for example, American cars. So there's the argument that you can, sort of save yourself some money by not doing that, but that's not easy, nor is it clear cut. That's one thing. And secondly, you face these costs every single time you go to the store, every single time you buy something, whereas your lower tax take gives you savings once a year. And so you have to trust Americans then that they are going to retain those savings to paper over their future extra tariff costs. Is that realistic? No, That's ridiculous. And so when you look at the net effect here, the pain from hitting consumption, the biggest contributor to overall economic growth, is every day and all the time. And you're going to countervail that by giving somebody a break on income taxes once a year and hope it evens out. That's, to use a recently used term, bananas.
So if that's one side of it, right? Like the tariffs are inflationary, but it's only temporary, so it's transitory. Fine. But if it's not transitory, inflation's turning up.
Yes.
And we're going to be getting a Fed cut in a bump in inflation cycle. Now, the labor market weakening, not weakening, you can look at the claims. We can adjust it for labor force participation, however you want to slice it. But this is not the comfortable backdrop of the Fed saying, okay, inflation's coming down so we can glide into 2%. And we better start cutting now before we get there. Otherwise, we're going to overshoot. And that's going to be a different problem. This is not that world. So I'm very much for Dylan today. Obviously, stocks pull back in a little bit, but there's a resiliency here. Ilya, you and I were talking before the show went on. This is a nice little rebound here off of the former high that we had back in July in ES, in NQ, and the Russell even, which is holding up here.
I'm most interested in here.
Okay, so I did mention this comment on air today, and I've talked about it recently with you guys, but Zero Hedge made the note that the only rational thing to do in times like these is to swing wildly from one extreme view to one extreme view. Perhaps I'm going to put myself at risk from doing that here. But the regime change that it felt like we were going through the past few days in stocks, small cap over mega cap, value over growth, Russell over NASDAQ, that was out the window today. And I know Tom and Tony were talking about that towards the end of last call before we came on air. So Ilya, why do you see this as a good opportunity if we see that these firms with the smaller moats clearly have price pressures coming through? And these are not the companies with the margins and the moats to absorb those kind of costs.
So, as we were just saying, the markets have been saying for a long time that the problem here isn't cost, that it is in fact going to be a one-time increase, but not for good reasons. That what's going to happen is these extra costs are going to hit demand much harder and what's going to happen is disinflation because of the demand destruction that these tariffs wring out of consumers. That basically the increase in prices will get consumers to stop buying to the kind of extent that they have been. Again, we already have weak consumption in the first 6 months of the year, and very weak by historical comparison. It doesn't take much as you get the pass through from this inflation in the wholesale to the retail to hit that even harder. What's interesting then is the Fed is on course to cut to fight this. And Russell has been particularly sensitive because it is cyclical more so than the S&P or the NASDAQ, because obviously...
Let me just jump in here real quick. Applied Materials had their earnings come out a little while ago. We missed this at the top of the hour. EPS came in at 248 versus 236 expected. Sales were a little bit better at 7.3 billion versus 7.21 billion. They're missing guidance substantially. They see Q4 net sales at 6.2 to 7.2 billion. The street forecast was for 7.32 billion in guidance. So Applied Materials here now down after hours. This is an 11.5% loss on the chart. Go ahead, Ilya.
Yeah, ugly, to say the least.
Russell, but I still go back to what I said to Tom at the end of their show, which is that the only thing that stands between this market and a continuation higher is anything that would prevent, basically, I guess, be a hot CPI. in September.
Well, right. So
anything that would jack
this is where
Fed
it gets
expectations back.
Yeah.
Also, and this is where, as we were talking about that at the end of last call, this is where the parallel of the jobs report is interesting. Stocks hated the jobs report, even though it ostensibly paved the runway for rate cuts by being god awful. Because what the markets want is not a recession. And what they don't want to see is that the Fed is already late. Even though they've been screaming at the Fed for months now. You got to go. You got to go. You got to go.
Polls show that the bottom 30% of income earners in this country think that we've been in a recession for the past few months, based on their own personal finances.
There you go.
And consumption, we know, in the first half of this year fell for only the first time since COVID. And prior to COVID, you have to go back to the first half of 2010, which, Dylan, I was still a little green behind the ears getting my career started, but that's on the other side of the financial crisis.
Yeah.
And that was the time, Radigan, right? When going into the second half of 2010, people thought we were going into a recession again, back to the depths of the global financial crisis. So first half of the year declining consumption, that's a unique occurrence that is just difficult for me to shake.
No, I get that, but I mean, I'm at a moment right now, and who you can take it or leave it, where my confidence in recession forecasting or consumer expectations, I think, are basically useless. We spent 2023? We spent one of these years in the past couple of years with everybody expecting a recession, or at least including me, and it just never happened. Which is not to say that recessions don't happen or won't happen, but I just don't believe that sentiment. I think the only relevant thing is jobs number, CPI, PPI, and the AI supernova and rates. And I think everything else that's not rates, that's not cost of goods, that's not employment, and that's not the supernova is useless.
Well, I think this is the key then, because we get this weak consumption. We now get evidence that the costs are being passed through from wholesalers to retail. Yeah. And now we're going to get retail sales numbers. So then you're going to get another jobs number and another CPI, PPI. Right. But the retail is tomorrow. So if this follows the model of the jobs report and is ugly, stocks are going to sell off, even though it paves the way for rate cuts, because that's not a level of intensity they want. They don't want rate cuts for recession reasons. They want rate cuts for the Fed is going to be a little bit more of a risk taker and be a little bit more forward looking and try to head this thing off. But everything we've heard from the Fed is that's not what they're doing. So this is where it gets interesting. If you get a mildly cool retail sales number, the markets probably go, oh, goody, rate cuts. If you get a decent retail sales number that isn't a blowout, it's probably the same. So if you're somewhere in the middle of the distribution, the market's probably like that. But any kind of tail risk, anything super hot that really eats into rate cut expectations, probably not good. Anything super bad that gets recession back into the headlines, that's not good. At least that's the story from the jobs report here. What did the markets love so much this week? A nothing CPI report that you could read each way you like. You want to look at core and be afraid of inflation? There you go. You want to not be afraid of it and look at the headline? Enjoy. Choose your own adventure. That kind of middling, vague, smoke and mirrors data, that's what the market's like here.
But can we just go to just anecdotal fact? We know for
and Dylan, I have that up here. I actually have that up on screen right now.
But
Bank of America
goods
sent
are
out the
going to be
same
more
chart.
expensive. Like there's no guessing. Like imported goods are more expensive. That is a fact.
Yes.
Imported goods are part of domestic goods. To Ilya's point, an American car is full of foreign goods. All the things. So basically, the cost of everything, whether it's foreign or domestic, has been increased. Whatever the CPI says, whatever PPI says, mathematically, there has been a 15% plus or minus, depending on the thing, increase in the cost of things. Now, maybe in some cases it's 5% because of the pass-through and it's not all foreign and blah, blah, blah. In other cases, it's whatever. So I think arguing about the price increase is silly. I think the question is what is the tolerance for the price increase?
Right.
And the market is
there
saying
seems to be high tolerance.
that the tolerance is high.
Well, that's one of the charts I have up on the screen here. Bank of America put out this chart showing total credit card and debit card spending growth per household based on their own credit card data. So it's not not the economy, but it's a big sample size. They see 0.
number.
No, and they see 0.6% month over month growth in July, accelerating after the increase in June, and both April and May obviously were bad. But maybe we're still in the revenge spending, Ilya, in terms of the data set. I know it's the middle of August now, and people's spending habits in August may have evolved. But July looks like it could still be a decent enough number. And so just like you had with CPI, if it's good enough that doesn't scream imminent recession, it's hard for me to get worked up about it for tomorrow. And I also point to this other chart. I mean, we're not even in a place right now where the treasury markets, given the treasury spreads, are thinking that recession is feasible here. 28.947% implied chance given the 3-month 10-year spread right now.
Mm-hmm.
That's well below where we were throughout 23, 24, even earlier this year. Ilya. Now, that's not to say this is a perfect indicator, but we've never had a recession when the indicator has been below 0.4. Ever. So keep powering on. That's the market's bet here right now, that the market will keep powering on. And the people who are playing in the market, the upper income consumers, as Bostic said yesterday, they're holding up.
Which brings us to the Russell and the conversation we were just having. Why the Russell? Because if you are going to have a relatively high tolerance for this inflation, or you're going to look through it, you're not going to have a recession conversation near term. Well, then what you have in a lot of these indexes is a break past their preceding high, and today a pullback to retest it. But whereas in the S&P and the NASDAQ, you have to buy something essentially a hair away from all-time highs, that is not the case in the Russell. In the Russell, you have a little bit more headroom. Risk-reward is a little bit better. So if you are going to be a buyer of stocks here, and I was absolutely circling around this today, just looking for a level that was attractive to buy vol at. It ultimately didn't happen, but maybe I'll get a better shot tomorrow. We'll see. But I was absolutely looking on the long side of the Russell today, because the high there was back November of last year. So we're talking almost 2,500 on the Russell. You're well short of that here, so there's a little bit more room. So do I think that the economy is in good shape? No, obviously not. But in the spirit of trading the price action, this was a nice little discount on Russell today. So I'm going to be watching this carefully tomorrow. The pricing, as I say, didn't really afford me risk reward that I thought was attractive enough. It was maybe like 1-to-1, 1.2-to-1. That seems like a silly bet before critical retail sales and other data is going to give us the next major inflection point in this story. So we'll see tomorrow. Maybe vol will get a little bit cheaper. Maybe the setup will get a little bit better. Maybe we'll get a little bit of a washout.
What's fascinating for me, Ilya, is the market's apparent perception of the consumer's tolerance for higher prices.
Yes. Moreover, the market seems to have forgotten why it wants these rate cuts. We had a big conversation about this on Macro Money yesterday, and of course we mentioned it on Overtime as well. The market is clearly more dovish than the Fed. The market still has $125 basis points between now and the end of next year, that's 50 basis points more than the Fed is forecasting. So the market is very clearly saying there is a bigger downturn in growth than the Fed appreciates that it needs to be acting against, while at the same time saying, but that doesn't matter for earnings, consumers, and the economy, which is incredible cognitive dissonance.
I mean, Ilya, I think we just got to go to the earnings themselves.
As it presents itself.
I mean, who is eating these costs ultimately? If we're to believe the data and believe the earnings numbers.
At this point, it's consumers.
The blend, and this is how you get to that conclusion.
They're passing it on.
FactSet, the blended net profit margin for the S&P 500 for Q2 25 is 12.8%, which is above the previous quarter's net profit margin of 12.7%, above the year-ago net profit margin of 12.2%, and above the 5-year average of 11.8%. So if profit margins are staying intact and wholesale prices are rising, who is paying the difference?
The problem with that argument for stock markets, and I want to give full credit to Bloomberg, they ran a big story about this today. You look at the spread between CPI and PPI, and right now it's very clear that consumers have not been eating it because the spread is negative. That is, CPI is lower than PPI. As the pass-through happens, that's going to change. And what's going to happen then is the problem
don't you think the market
that you don't want to see for stock markets.
What I don't understand is that is hardly a secret.
You're right.
And this is the cognitive dissonance in the whole thing.
I mean, the market is a discounting machine. The market knows what you just said is a fact, and they're okay with the current price levels.
Is it possible
this is because of the rate cuts? Sorry?
Isn't that the 40 chess here? Like the tariffs are going to push up inflation. It's going to lead to a negative downturn. Trump's going to have to scale them back in some form or fashion.
And the Fed's going to cut rates.
So the Fed's so the tariffs are going to come off at some point, and then the Fed's going to be cutting rates.
You're assuming a lot for which
that's what the market's assuming, right?
But that's
no evidence.
I don't think you can impute that at all. I don't think there is any way to know that the elephants will fly outside our window in 5 years. Like, who can know these?
How do you justify
I've seen the movie Dumbo
level?
And this is where some of us look at this and go, the market's level is not reflective of optimism about the economy, as break-even rates in the bond market would readily show you. The market's level is about a positive sentiment shift around the idea that having threatened to crash 40 years of a U.S. post-war financial system that has given the U.S. virtually everything it's ever wanted financially on a platter, the U.S. is going to stupidly destroy that order.
So
and then in April, the U.S. decided, no, actually, we're not.
Does that not then make us hand over fist dollar buyers for the second half of this year?
I'm a hand over fist dollar buyer.
Mm-hmm. Hand over fist dollar buyer.
If I take your logic, like if the whole thing is okay, Trump is not going to disengage 40 years of financial infrastructure.
Yes,
which is why the dollar.
I think that's what the stocks rally is all about.
Mm-hmm. Hey, what's the most hated trade on the board still, according to the Bank of America Fund Manager Survey? The U.S. dollar.
Fantastic. Beautiful.
You're saying long dollar is the least popular trade according to B of A?
Short dollar is the most popular. Long dollar is the least popular. Yeah.
Excellent.
I mean, that's nice. That's almost a confirmation, I suppose.
That's excellent.
To our little
I love it.
Hypothesis.
I love it.
It's a crowded trade. And listen, there is a... Well, forget the rate cuts for a quick second, right? The story coming into July...
And the dollar has stopped falling, by the way, despite the fact that the rate cut bets have grown.
So that's the story here. The story is since July, rate cut bets have grown. And I think this is one of those, in hindsight, we talk about positioning being so important and it being a crowded trade.
Yeah.
Even though the rate cut odds have gone up, has the dollar been able to keep falling? Everyone who wanted to sell is sold. It's difficult to keep it going down. And the series right now of higher highs and higher lows remains, Ilya, off the bottom here. That's not a break yet.
Nope. I'm still.
It's not a break yet.
I mean, do you have a preference? Dollar, euro, dollar Canadian, dollar.
I have a basket on. I have a basket
Canadian,
on.
euro.
I'm long the dollar against euro, pound, yen, Canadian dollar, Aussie, Swiss franc, across the board.
I personally like the Canadian dollar. It did not jump significantly.
That's been one of the better ones. That and the franc, to Chris's point.
Yeah, but the Canadian dollar didn't rebound substantially when the dollar was coming off again here in August.
Yeah.
It ran into its monthly moving average, its 50-day moving average, swing lows that we had in June and July, and had started to turn lower again.
Mm-hmm.
So it's not exactly a situation where it looked like it was a source of strength. The yen, on the other hand, down by 0.27% today. Look at that beautiful test of that 50-day moving average. Kissed it, turned lower.
We hold it.
This is exactly what you want to see. The volatility is not exactly there if I'm looking at a 16.7 IVR in the end to look to sell calls, but in the euro, you're still north of 46.
Yep.
46 in the biggest, most liquid currency future. That's all you can ask for.
Yeah. Now, in my mind, the most interesting thing on the board here that affords you the luxury of not having to worry about what the stock market is smoking here is to look at the dollar and go, you know what? Either we're going to get these rate cuts or we're not, but the dollar has stopped responding to the near-term speculation. So either the dollar is going to rally because this whole thing is a giant growth risk and you're going to get a dollar back to haven mode, because now that you've decided you're not going to crash 40 years of a U.S. financial system, the dollar is back to being the cash of last resort in a risk-off scenario. Or the Fed is going to dither and you get a yield kick. And then the dollar rallies for those reasons. For whatever reason, the dollar is no longer interested in the idea that the Fed is going to cut by 50 basis points this year, which is what the markets are pricing. It's what the Fed has been saying since December of last year. That expectation is baked in firmly at this point.
Dylan, let's switch topics here and talk a little bit of corporate news that came out here after hours. What's Warren Buffett's favorite expression about buying stocks, Ilya?
Which one?
When people are panicking, something in the street?
Oh yeah, when there's blood in the streets by property, sure.
UNH is now part
go
of
full
the
Luigi on me now.
I didn't say it. Ilya talked about blood in the streets when I brought up UNH. I did not do that.
We're quoting.
You set him up, sir. You set him up.
I did no such thing.
We're quoting the Oracle here. Let's just be clear.
Warren Buffett
but also,
is
if
now,
ever there was an assessment of contrarian investing in a phrase,
I mean, is UNH basically binary now? Either it will continue to exist, and this is the greatest entry point in the history of mankind, or it has to go bankrupt.
Well, Buffett made that decision today. UNH is up 8.14% here after hours, after Warren Buffett reveals he purchased 5 million shares of UNH. Incredibly steep discount. This is probably the go signal. If Uncle Warren's in Ilya, Dylan, right? I mean, this is now going to bring in a whole host of people and followers. And
stop thinking. No thinking. This is a no thinker.
No thinker.
The risk reward isn't tempting for me yet. Because we're basically near the top of the recent range. When Uncle Warren does things, let's remember he never ever sells, but for very, 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 very special reasons. Mm-hmm. And his timeline is measured in decades. So that his decisions and our decisions in a 45 DTE world are very different decisions.
Yeah, but a lot of traders who jump in and don't think for themselves, which we could be those people, Dylan, right? We don't need to think for ourselves here. But there's a lot of people in this world who follow Warren Buffett into whatever he does.
Right.
No matter what.
Sure.
So this
Thinking
probably is going to get a pop here.
ill-advised at this juncture.
Well, and this is why I think what you want.
I am.
That's why you need good risk reward. You're at the underside of the previous range.
Let's call up the screen. Let's figure this one out. What are we doing, Vecchio? Fire up the panels. What are we doing?
Thinking about right now, the stock's trading at 29.25. It closed at 27.61. So if we wanted to think about the close prices, okay, something like a short put spread at 250, 260. The short strike about $10 away from the close, the long strike $20 away from the close would have yielded in the neighborhood of about a 2-to-1 risk to reward. Sliding that up another $20 to account for the change in share prices here, you're probably looking at a 270, 280 short put spread. Then we have to see where the market goes tomorrow when it opens, but anything in the neighborhood of a 60 to 70% probability of profit, 3-to-1 risk to reward or better.
Spread over any other mechanism at this point?
Yeah, that the stock's done falling. The lows for today come in around 266, 267. So effectively, the bet would be that this is the Buffett bottom for United Healthcare.
Well, and if you can get a run from, let's say, 300, which is that little congestion range middle from mid-May until the next leg of the sell-off mid-July, if you could get a run from there up into like 425, 440, the underside of the range that prevailed from 2021 to 2025, that's good enough. I just want to see a little bit of confirmation here because, again, we're at resistance, directly at it. So the risk reward here isn't great. Either you get a little bit of weakness tomorrow to reset, or you get a break higher. Either way, I mean, the market's obviously closed. So whatever you're doing tomorrow. But if you get a little bit of a reset on risk reward, the architecture is there. It's got to do that thing, though.
UNH to me listen, UNH has so much risk because of all the lawsuits.
Tons.
There's probably better plays out there for longer term trading to the upside. What company am I thinking of here? Is it CI? Yeah. Cigna, for example. Cigna doesn't have all of that baggage that a United Healthcare does, and there's still more lawsuits coming. So if I was thinking about being constructive on the space longer term, I'd probably like a Cigna more than a UNH. But the Buffett bottom to me is a compelling enough point where today's low, the recent swing lows that we've seen, probably will hold in the short term. If you wanted to get out, you've probably been getting out over the past few weeks and months. So I don't know if there's a significant long trade there, but if there's vol on the board, 27.9, if it's persisting tomorrow, we have a level to trade around 260, 270. And that's a potential, that's just a potential idea to kick out higher volatility than what we're seeing in the equity indexes.
Yes.
I know what I'll be doing. Dylan, I do want to get your opinion here because it's the last show of the week. It's the Thursday here. There's so much going on in the world, but surely we need to be talking about this Alaska meeting between Trump and Putin. I couldn't help but notice today that oil prices rise as some of the headlines about this meeting are coming out, and the corresponding move is for the poly market, betting markets, to reduce odds that there would be any sort of ceasefire arrangement reached when Putin and Trump meet. Do you think that this is yeah, how do you think this is going to play out and how do you think it impacts oil?
I believe Russia exists. Forget Russia. I believe Putin, the president of Russia, exists in a psychological state where he is utterly indifferent, where no one, in his mind, no one, not Europe, not Ukraine, not the United States, no one has any leverage on him at all.
Yeah.
And so and this is a very, Ilya can speak to this, but allow me to do my best version of being a Russian sort of interpreter of culture, no culture in the world is more notable for its tolerance for suffering and its indifference to outside leverage. And so I agree with the rise in oil prices. I agree with the poly-market discounting. I believe that Putin has zero. If the Ukraine war will end, whatever that means, when Putin wants it to end on the terms that he wants it to end on. And there's nothing that the United States or Europe or Ukraine will ever be able to do about it. That's what I believe. This is an
There's
ice-cold
a very,
situation.
very strong argument in favor of that perspective. I think Dylan's absolutely right on the money as far as the Russian population's willingness to take it on the chin and just expect the Tsar not to care and to do what the Tsar does. The sort
And
of
life
edge
is good
case,
in Moscow, by all accounts, by the way. No problem. Cafes, I mean, the country's doing,
it's
I mean,
good.
it's street
It's
life.
good in Moscow. It's probably decent in St. Petersburg. It's probably awful otherwise, but
No, well, yeah, the
is it
graveyards and the
but is it
countryside are
more
horrendous.
awful than
They're
people are
politically
kind
irrelevant.
of right? Like awful, yeah, but
No, I was in Lithuania a couple
the
of weeks
Russian
ago in
mindset
Lithuania.
the Russian mindset usually is things may be awful, but it's our awful.
Well,
And
not only that,
nobody's gonna tell us that our awful isn't what we want.
And there's no number of tombstones for 20-year-old men that's going to change anything. I mean, I was in Lithuania a few weeks ago, which is, 20 miles off the Russian border of Kaliningrad.
Yeah.
And it is a widely known fact that the number of grave sites of young men has exploded over the last few years. So it's
sure.
the point is not that this is a human catastrophe or that Putin is ultimately a mass murderer, in my opinion, of his own people and others. Mass murderer. It's that the political tolerance for it is unique. No country historically, I mean, look at World War II. It's a point of pride. There is no country in the world that is more tolerant of killing its young men than Russia. And that's what makes them indifferent to leverage between nuclear weapons and the history of basically unlimited tolerance for death of their young men. They're going to do whatever they want.
I mean,
and Trump is a sucker for him at the end of the day because Trump wants to be perceived as an equal. And this is Putin's dance, and everybody else is just in the room.
I like this ringtone. It's very talk show radio. This is very talk show radio.
Yeah. I mean, another way to look at it is just to say that for him, you ride this thing until the wheels fall off because either your gambit ultimately pays out because the other side is desperate for peace, or, and by the other side, I mean, of course, Europe, the US, Ukraine, everybody. Everybody wants really badly for Russia to stop, which gives Russia the cards and the leverage. And Russia, at least in the president's visage, is of the mind that, look, either I'm going to get eaten internally or I'm going to win this thing. Screw it. Run it up. We've come this far. Let's see how far I can push this thing. Maybe I can still make it on the other side.
And now I have the American president in the room with me, so the alienation is declining. I'm no longer ostracized. So now I'm doing this iron squeeze in Ukraine, and the ability to isolate me is in decay. I'm getting stronger.
And Trump is out here attacking Europe today for buying Russian oil from India.
Right. Only issue here is every now and again, if you look at Russian history, every now and again, the population says enough is enough. and there is sometimes out of nowhere a complete hard reset. Now, the problem with this, of course, is there can never be any evidence of it because everybody is too afraid to say what they think until the whole thing hits the fan.
Well, it's illegal to use the word war in Russia.
Right. So the edge case, and there's no evidence for this being imminent or anything like this, but the edge case here is revolution.
Well, yeah, I mean, it's pretty clear from the public reporting that Putin sees the war as necessary for his regime's survival. If he loses the war, then the regime falls.
And by the way, we don't just mean the Bolshevik revolution. We don't just mean the revolution against the Tsar. I mean, Yeltsin, the early 90s, the collapse of the Soviet Union. I mean, that's also a revolution. That's a recent revolution. It's not followed by civil war as the Bolshevik revolution ultimately was. But we're looking here at the only way this resolves in a way where Putin doesn't get everything he wants is he gets to a pain threshold that is so great that the population finally says, you know what, let's just burn this thing to the ground.
All right, so we get to oil here. You're getting a bounce back. If we have a bounce back to where we were prior to whatever kerfuffle this was at the end of July, probably 64, 65. Is this still a place to continue to trade sideways in oil? I think so. I'm doing it. It works. Not the sexiest trade, but still risking 3 to make 1, 60% plus pop. Dylan, we talked about this earlier this week. Consider it a missed opportunity, perhaps, but Intel up 7.38% today as the U.S. is considering weighing an investment following the CEO's visit to the White House. We talked about this earlier this week. Is this the best strategy that we can put in our pocket as a flyer right now to close the loop on it? Should we just be looking for headlines about what CEOs are going to the White House?
It doesn't. It certainly falls into the no thinking opportunity zone. I've heard worse ideas. I mean, the best idea is to buy UNH on Buffett. You know, I would say it's a distant second to buy the CEO meeting, but buying the CEO meeting is not a terrible idea. But I also think that actually the Putin-Trump summit could be a reason to buy oil.
You have the final word. Tell us before the show ends.
Me or Ilya?
You. Yeah,
Listen,
you.
Go.
The final word is very simple. This Russia thing is a boondoggle. It plays to Putin's benefit, and oil should actually get higher, not lower, because I think what you're going to see coming out of Alaska is a calcification of the fact that no one can do anything to stop Russia, and that all hope for any intervention from Ukraine, Europe, or the United States will be lost after this meeting.
With that, overtime's out of time. We'll be back same time next Monday, here every Monday through Thursday on Tasty Live, right after last call, 4 p.m. Eastern, 3 Central. So for Ilya Spivak in San Francisco, Dylan Radigan on the run, I've been Chris Vecchio in New York. Good luck trading. After this, more Tasty Live coming at you. See you at Macro Money.
See you there, everybody. Tariff inflation is here. That's the message we get that gets the dollar going and at least temporarily spooks the stock market today. Will consumers get discouraged? That's what we're going to try to unpack here because, as ever, that is the biggest question for this U.S. economy and ultimately then the markets. I'm Ilya Spivak, head of Global Macro here at Tasty Live. This is Macro Money. And we're going to take a look at what the markets did with today's data offering, potent though it was, and consider what all of this means as we start to look at what consumers might do with this and why that's so important when we get retail sales and consumer confidence numbers here in less than 24 hours. So let's break this down. The market today, a little bit soggy, but only a little. S&P 500 down 0.07%. NASDAQ down a little bit more, 0.28%. Hardly major changes here after yesterday's big moves and, frankly, big moves earlier in the week. That CPI report we got this week still largely intact for its influence to the upside on these markets. Probably the biggest swing, which we don't have on the chart here, was the Russell down 1.28%. That's after a rally of almost 2%, 1.96 yesterday, and a blistering almost 3% rally on that US CPI report the day before. So we have a little bit of a cooling off rather than some sort of a capitulation in stock markets today. Notably, yields go up. 10-year up 1.25%, 2-year up 1.44%. Crude oil is up for its own reasons again, it would seem. It's really been moving around a familiar range here for its own reasons. We, of course, have that summit between U.S. President Trump and Russian President Vladimir Putin in Alaska coming up, so maybe that's something to do with that. But oil has been really pinned to this central axis around 62.20, 63.40. That's been a sort of center line for the broader 54, let's say, to 73 range, going all the way back to September of last year. So, yes, we get a little bit of a pop, but do we ultimately get anywhere from that center axis? Not really. In line with the move in yields, in line with the move in stocks. Gold down a little bit here, 0.8% almost. Euro down, yen down. That, of course, speaks to a stronger US dollar. And Bitcoin off 4.09%. Again, not the craziest change in sentiment here for Bitcoin. I mean, certainly it's a notable thing that it has swung as it has, and indeed it's erased 3 days of gains today. It's essentially back to where we were last Friday, but nevertheless, we're still sort of in this broader 123,600 to 113,000, let's say, range that's persisted since mid-July. So notable swing, certainly, but again, not anything that appears game-changing per se. But certainly the tone here was weaker risk, higher yields, stronger dollar. And that sort of comports with what we're seeing in Fed policy odds. Note here, we're still very much on track for a September rate cut, 92.8% probability in Fed funds futures. But whereas yesterday there was about a 6-7% chance that it'd be a 50 basis point cut, not 25, today it's a 7% chance that there is no cut. So we're getting fuzz at the margins here. And whereas yesterday the fuzz was in favor of a more dovish perspective, today the fuzz is in favor of a slightly less dovish perspective. But the central thesis remains September is probably going to be a rate cut. But the markets clearly saw some data today that swung them from erring dovish to erring less dovish. The outlook on the path forward here overall, now firmly 50 basis points for this year. That's exactly in line with the Fed's own forecasting from the June summary of economic projections. That's the last time this was updated. 50 basis points here from 4.4 to 3.9. But then the disparity continues for next year. The Fed sees only 25 basis points here. The markets are discounting clearly a lot more. They're fully priced here, it would seem, for 3 cuts next year, give or take a few basis points. So the architecture of what happened here yesterday into today is broadly holding. But the market's clearly caught a little bit of indigestion, and they caught it because wholesale inflation numbers, incidentally, as we suspected earlier in the week, and as we talked about the CPI report, suggested that that CPI report in its benign visage is smoke and mirrors to a significant extent. And that, of course, came from PPI data. So here we have it. This is the month-on-month increase in wholesale inflation. We can see with the naked eye here that this is a dramatic month-on-month surge in wholesale inflation, 0.9%. By the way, it's the same number for headline and core. So this is exactly the kind of wholesale inflation that you cannot write off by saying, well, food prices, energy prices, the Fed doesn't care about those. That's something that they don't have agency over. This is not going to make or break policy. No, this is core as much as it is headline. This is an eye-catching jump by any stretch. And we can see here that the reference point for this goes back, obviously, significantly to this reflationary surge that we saw through COVID. This is ultimately what the Fed moves to act on with those rate hikes in 2022. So here is the middle of 2021 where the Fed kind of starts to recognize they have to make a move. And of course, this is where the hiking cycle kicks off. So we're back to essentially a 3-year high here for the last time we've seen comparable jumps. Here's the year-on-year reading. At this point, we're back to February for overall wholesale inflation, but the violence of the jump is clearly on display here. If this was something like what looked normal through the markets digesting the onset of tariffs, well, we're not digesting them anymore. They're starting to appear, and they're starting to show up in wholesale inflation. Most importantly, I would argue, if we look at how this has worked up to this point, we've seen that wholesalers have eaten extra tariff costs by basically saying, we're just going to make less money. We're just going to take it in margins. And we're going to accept lower margins on our business because what we're going to do is we're going to eat these tariff costs. And the reason why we're going to eat them is we don't know what's going on with this tariff regime. Things are changing very quickly. We're not going to pass on higher costs to consumers, get those consumers to stop buying stuff, and then the landscape changes and it turns out we've destroyed our own demand for no good reason. So since the beginning of the year here, we can see even at the final demand stage of wholesale inflation, this trade services component, that's wholesalers' margins. And we can see here that in this latest data, those margins shoot up aggressively. Back to January 2022 is where we have to go to see something comparable. And of course, what that means is rather than eating inflation and letting it bring down margins, it is being passed on and those margins are expanding. So wholesalers are passing on tariff inflation. Most importantly, where this holdover, this insulating of consumers was most pronounced was even earlier in the supply chain. We can see here, this is final demand for PPI. This is PPI intermediate demand. So this is the very, very beginning of the supply chain. This is where the tariff cost is initially felt. And we saw back in April when we sort of hit maximum holy moly on concerns about tariffs, they end up taking a hit of over 2% in a given month on margins, which is a huge hit, a recession-like hit. where wholesalers say we are not going to pass on these costs. Well, they've started to pass them on. We get this jump here in excess of 1%, even at the intermediate level. And this ends up being the biggest jump at this stage of the supply chain since the middle of 2023. So we're talking a 2-year comparative reference point. Now, obviously, there's fuzz here as we get initial kind of fuzz around the tariff implementation. But if we kind of take ourselves outside of 2025 and consider what is a reference point for this historically, this is where we're looking. Now, when you get this kind of a thing, when you get wholesalers eating the inflation at the start of the supply chain, what you end up with is the kind of CPI numbers that we've just seen, where most inflation is still in services. This is where the markets go, oh, well, this is so refreshingly normal, 2.7%. Okay, so we get a little bit of a bump, but this is not anything crazy. And in any case, the goods side of the inflation story is still relatively modest, even though it's perking up. Or so it would seem, because again, most of inflation is still living in services. But what we see from the thrust of the change here, where inflation is dynamically moving higher versus not, in services, it actually comes down in terms of its contribution in July, but in goods, it's clearly going up, so much so that we can see here the thrust in goods for a second consecutive month is almost a tenth of a percentage point, whereas in services, it's actually going the other way. And as we saw earlier in the week when we unpacked this a little bit, core goods inflation went up month on month in July. Core services inflation went down. The rate of core goods inflation is the highest in 2 years at this point. This is our reference point back here, sort of mid-2023. Services inflation is also going up, but much more so within its range. The reference point here, December of last year. So what we're looking at is indeed evidence that suggests that we have tariff inflation now heading in the direction of consumers. And of course, where this becomes particularly worrying is when we look at these GDP numbers for the second quarter, what we see is, on the one hand, the other force keeping inflation at bay for consumers. We can see in the first quarter here a giant front run of imports. And again, this is contribution to GDP, and imports are subtracted from GDP. The component from the external sector in GDP is exports minus imports. And so the surge in imports here looks like a decline because this is a detraction from GDP that imports are surging. We can then see in the second quarter, imports are an addition to GDP because they're cratering. By the same logic, we can see here in the first quarter, inventories, which are a part of the investment component here, they surge because obviously all these imports have to go somewhere, and they're not going to feed current consumption. They're going to stack warehouses full of goods at pre-tariff costs. We can see that in the second quarter, those inventories are falling. That is, those goods are being spent. They're being sold out of inventory. So rather than companies buying goods that are now including of tariff costs, They are being sold out of inventory, but of course imports have cratered, so those inventories are not being refilled. So not only are wholesalers now passing on inflation costs, as the PPI data here suggests, but we are now seeing the other source of defense for consumers, this inventory buildup in the first quarter, that's falling away because those inventories aren't being rebuilt and the stock that's in them at the lower cost is being depleted. All of this, of course, comes together to tell us a story about how consumers are going to start to really feel these tariff costs. And what we already have in this GDP data, as we've said time and again here, is the contribution to GDP from consumption, which is by far its largest component, 68% of GDP. This contribution is already the smallest in the first 6 months of this year since the first 6 months of 2020. That, of course, is the COVID recession quarters. So consumption is already weak, and now we have this pass-through of inflation to consumers, not only because this front run is running out of room, but also because clearly wholesalers have started to make their move. You can see that here. This, of course, makes for very interesting watching as we get retail sales numbers coming out here to finish the week in macro event risk, 0.5% rise expected month on month after a 0.6% rise in the prior month. We're also going to get consumer confidence numbers. The expectation is that we're going to hold relatively steady on the current conditions index. Maybe we'll even get a little bit of a slide up on the sentiment side of things, but expectations expected to dip. And of course, not only are we going to be watching very closely what happens with the interplay between these numbers, but also with the one-year inflation forecast, which we can see here has been a critical driver of consumer sentiment. Indeed, since we saw the peak in inflation concerns going into the Fed's rate hike cycle, this is when they finally say, you know what, it's time for us to get a move on. This peaks as sentiment bottoms because, of course, the Fed starts doing the hikes that they so aggressively delivered in 75 basis point increments. And so inflation expectations start falling, consumer sentiment improves. Then we get to the tariffs. Sentiment craters as consumers start to say, well, the tariffs are going to be very inflationary. So we get this jump in one-year inflation expectations from 2.6 to 6.6 at its worst. But we've now cooled back down to 4.5 as of June's numbers. We'll see if we get further cooling here into the August numbers. But if in fact consumption is already weak as of the end of June, the second quarter GDP numbers, and we can see that in July, costs are already starting to feed from wholesale inflation and into headline, then the expectation would be, perhaps, amongst consumers that inflation is actually going to be higher going forward, not lower. And if this starts to tick back up, well, then that's bad news for sentiment. So the threat here facing markets is that, in fact, what we are on course for is another weak consumption quarter in the third quarter. And this is the ingredients from which recessions are made because, of course, we have an economy that's overwhelmingly consumption. Now, from the perspective of the markets, Markets do not want to see recession-flavored data. In fact, we saw that in spades with the jobs report. That's this wiggle lower here, which was, of course, very disappointing. And we see this rebound because what that ultimately gives us is a more dovish outlook on the Fed. But as these numbers go, if we get very strong numbers, well, then the outlook on the Fed can't get very much more dovish. If we get numbers that are relatively close to expectations, then chances are the probability of a September cut remains broadly intact. If we get very weak numbers, like we did with the jobs report, ostensibly the markets become more concerned with growth than they are with rate cuts, as the jobs report pointedly showed us. And then stocks don't like that either. So the middling outcome, the middle of the distribution outcome for both retail sales and sentiment is ostensibly what the markets are after here. But perhaps even more interesting than stocks is the US dollar, which has been carving out a bottom. At the very least, it has stopped falling after this precipitous decline in the first 6 months of the year, even as you get this most recent dovish shift in expectations. And so whatever happens tomorrow, perhaps one of the more interesting trades on the board is either you get a safe haven dollar that rallies because the markets don't like retail sales numbers, or the retail sales numbers are strong. Stocks are left scratching their head as to whether they like the earnings part or the less dovish implications for the Fed. But with those less dovish implications, you get a stronger dollar, much as you saw today. So if stocks are perhaps a little bit fuzzy, the US dollar, in its resilience since the beginning of July, seems to be telling a story. We'll see what that story means for stocks, but for the dollar, it might mean an interesting trend change opportunity that is just beginning to ripen. And that is macro money for today. As ever, we are here Monday through Thursday, right after Overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm back with Chris for Futures Power Hour Mondays and Fridays, writing for the News and Insights portion of tastylive.com, commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back next week. Happy trading.
What is going on, everybody, and welcome back to Risk and Reward with Gus and E. Today is Thursday. We got one more day of the week. We also had the open house today. That was a pretty good time, wasn't it, Gus?
Yeah, it was awesome. Getting to meet everybody and finally put some faces to the names that we're seeing in chat all the time. Yeah, it was excellent. We have our live event in Chicago tomorrow, which I am getting up bright and early for. Let me tell you. And yeah, looking forward to that. It's a fun week, a little bit chaotic week, but you know we like to bring the chaos here. The fun comes with it.
Exactly. You thrive in a little bit of chaos. It makes things a little interesting sometimes, but no, it was a really good time today. Really nice to walk around, meet everybody, and really just game plan for tomorrow. I haven't actually been physically to the live show, so I'm actually really looking.
Yeah, this will be my first one as well. I've done lots of the pre-recorded stuff that we shoot over at Live Bash and all that good stuff. But I've never been to one of these live events before. Yeah. I've only been here 6 months, so yeah.
Looking forward to it.
It's going to be exciting. Yeah. I'm not looking forward to that alarm tomorrow morning though.
No, you're already thinking about it, right?
Bro, I got to be there at 6:45.
So what? That means you got to wake. Be there 6:40. So you got to wake what?
5:45, 6, something like that.
Yeah. Things are prepped the night before.
Yeah. Yes. Yeah. But it's gonna be a fun time. I'm looking forward to it. I'll tell you what too. I just before we started, I got a notification from DraftKings. They say they have a pick for the Diamondbacks Rockies game tonight. Guys, PSA: if your sportsbook ever tells you should take a bet, run the other direction, please. Okay, that's all I got on that.
I hear you completely. Again, Colorado Rockies. I'm a Colorado guy. I got to put my input.
Boy, are they terrible.
Bro, I could as I'm lining that up, I'm like, They didn't give me much to work with here. I haven't really been watching the Rockies since the Matt Holliday days. I don't know if anybody remembers. Shout out to Matt Holliday. But anyways, as we get into the segment for today, UNH, that's always been the talk of the town the last few weeks, especially with Luigi, the shooting with the CEO. We'll give a quick update and a rundown on all of that. But we had some pretty big moves in the after hours. What happened in UNH, Gus?
Yes, Berkshire Hathaway has announced that they have put their hands on some UNH, $1.6 billion of UNH to be exact. They are essentially just buying a large dip. And let me tell you what, I beat Berkshire Hathaway to this sentiment. I bought before they did. They disclosed that they added this position at the end of June. And Errol, what a luxury it must be to be a Berkshire Hathaway, a Warren Buffett, a Peter Thiel, and just be able to say, hey, by the way, guys, I bought this, and then it is immediately.
It just goes up.
Yeah, you just are right. Yeah. You are right just by telling people that you did it.
And you know what's funny? I mean, Warren Buffett and some of these guys have really solidified their name in headlines and just getting buzz. Because I think about Elon Musk, seeing those tweets, seeing what Elon eats for lunch, seeing that move the market was so profound to me. I thought it was insane that an individual could affect the overall market or his specific stock, especially because it's such a massive underlying. But Warren Buffett isn't somebody that tries to stay relevant. He's not right.
And he's left Berkshire Hathaway.
Exactly.
Yes.
If anything, he's trying to really go into the shadows, and we're still seeing his names in these headlines. I don't know. What are we still trying to milk these headlines while he's still around and relevant? Whatever the case might be.
Well, I'll tell you what. As somebody who just moments ago wrote Warren Buffett's Berkshire Hathaway on this slide, I am absolutely trying to milk these headlines. Yes, it's what you must do.
At me, bro.
You got to play the game.
Yeah, but the fact that we still think about Warren Buffett and by him making a big purchase, it's still a big deal to us, right? Elon Musk is on Twitter. He owns Twitter. Elon Musk is a little bit of a character. So it's not a surprise he's able to develop and continue to grow his personal brand because it's Elon at this point. Obviously, he's going to have the confidence to do it because when you're the wealthiest man in the world, you're going to go out there and probably say whatever you want to whoever you want, however you want. But again, Warren Buffett is in the shadows, and his name's a massive deal, especially for whatever he's putting his money towards.
Yeah.
So
yeah, it's very interesting. I think Berkshire Hathaway and Tesla stand above all others in that you are buying the man,
right?
When you buy the company, and I mean, like Tesla will move on SpaceX launches and like all these other things that Elon is doing, and it just is very interesting sentiment and vibes. But yeah, let's get into it here. This is hot off the press, guys. They just disclosed this position after market close today, so we'll catch you up a little bit. So yeah, UNH having a bad year, 46% drop in share price year to date. It was more than that just a few weeks ago. They've been gradually climbing up a little bit. They issued a dividend recently that gave them a small bump. Lowered profit forecast, billions in expected additional costs, ongoing federal investigations, fallout from a cyber attack, and reputational damage from a high-profile executive murder case, which, yes, their CEO was assassinated. That was the first part of this issue. And then when literally the very worst, most parabolic thing that could possibly happen to your company was going on, all of a sudden the government was like, oh, man, there's regulatory concerns here, which sent UNH down even further. But the reality is that, and my sentiment in getting involved with UNH, 2 months ago now, was just that this company isn't going anywhere. Right. They're still strong. It's turbulent in its turnover, and they might have to pay some fines, but eventually it was going to return to those higher highs. I was never expecting a catalyst like this. My sentiment the whole time was I took calls 18 months out, and I was just going to wait and let it slowly creep back. Good gamma. And now, suddenly I've gotten a huge bump.
No, so. I mean, especially with a case like this and somebody like Warren Buffett. Warren Buffett is known to be a very investor savvy, very kind of safe, I make smart bets kind of guy. And he's kind of known for that. It's built into his brand. With all the chaos that's happening with UNH, it's like, wow, Warren Buffett's getting involved in this, and this seems so chaotic, and it doesn't seem like Warren Buffett typically sides on the air of chaos. So for him to get involved again, kind of surprising to me, but exciting to see the stock pop off over 20-something points. So, I mean, if you were short, I'd be patient on checking that portfolio in the morning, but I mean, if you're long, definitely go check it out right now.
Well, yeah, and it's very interesting because, I mean, I think Warren Buffett is arguably, if not just certainly, the greatest investor of all time.
He's like the Michael Jordan.
Exactly. And with that must come contrarian sentiment a lot of the time. I mean, you're going to have to be contrarian pretty often to be as good as he is, and this is about the most contrarian thing you could possibly do right now. Nick Batista described it as a deal with the devil on an interview that I did with him for TikTok, and it's true, man. Buying UNH right now, it does feel like making a deal with the devil. Everybody hates this company. If you're talking about in the market, everybody hates this company's performance. Outside of the market, everybody hates this company on morality. It's a bold move.
I mean, I think it's an interesting one, and we can go ahead and jump to the next slide here. But also, I think it's funny by how sometimes our own individual biases can absolutely sway financial decisions, and in terms of what we want to get involved with. I think we were talking on that topic, I think earlier the year with the whole fiasco with Elon Musk. Elon Musk kind of started to become more of a controversial character. It's almost like he stepped into that role. There's no way he's not smart enough to think about that's the role he's stepping into.
Elon Musk, he tests the limits of no such thing as bad publicity.
100%. Elon Musk is so calculated with everything. Everything he does, I'm like, he had to have thought about the potential outcomes and scenarios of this. There's no way he just did something off a whim.
You guys, Omaha, and you guys with this HIMS conversation in chat, this is making me laugh, but I can't read any of your things out loud. This is UNH's price action since this news broke. This is all after market today. What is this? 1 minute candles?
1 minute.
Yeah, 1 minute candles into market close today.
I'm sorry. This might be the 5. We'll double check on that, but it's an intraday chart.
Very short time frame.
It's an intraday chart.
Yeah, I mean, you can see the furthest time we can see back is 9:30 a.m. this morning. So this is today's 5 minute chart on UNH. Can you guys look at this chart and tell me where in the chart you think Berkshire Hathaway disclosed their holdings of UNH? I know it's really hard, but I really believe in you guys. We have a very smart audience, and I think you can probably figure it out. Big move up for UNH. It's just continued to climb. I think it's reasonable that this thing opens over 300 tomorrow. The title slide says it all. Midas has touched this now. It is gold. So I think everybody's going to be scrambling to get on that train. Fortunately, I booked my ticket 2 months ago. Tell us the timeline.
Just a little bit of a timeline and context. I can't even believe this was in December. It feels like it was just a few months ago. But December 4th, 2024, right? We had the United Healthcare CEO, Brian Thompson. He was shot in the back of the head. I think we had a little bit of that video footage that was going around. But that was in December. Feels like that was just a few months ago. I was going to say the opposite.
That feels like forever ago.
Doesn't that feel forever ago?
Oh, yeah.
It does.
I mean, it's just, and that's sort of just a personal thing in my life. It's like, if you talk about events that have happened, like in my life, I was in college finishing up finals around this time, and I have graduated, went to South America, moved to Chicago.
You're a local now.
Yeah, so it's a lot can change. A lot can change in 8 months. It feels like a lifetime ago to me.
It's a fast timeline within this timeline right here. So
thank you, Theta Trader. Line go up, Gus. He says, Kirk, that is absolutely right. Ding, ding, ding.
December 9th, just a few days after, Luigi was arrested in Pennsylvania with a ghost gun and a suppressor and a false ID. It always blew my mind when I learned about the black market for the first time, and I heard you could hire like hitmen, you could buy this, you could buy that. I mean, certain organs, pretty much anything you could.
Anything you could. People. I mean, anything you could think of.
I mean, quite literally. So he did have a ghost gun. Probably has to do with some type of black market of the sort. Early 2025. He was formally charged with murder, terrorism, prosecutors looking to seek the death penalty. Mid-2025, UNH stock declines amid legal, federal, and operational issues. Buffett quietly accumulates shares, right? He's somebody that does not do things for the attention. If he could backdoor his way out of everything, he would. He's very quiet. But August 14th, he's not able to be quiet with these footsteps because they have such massive position sizes that they're trading with. Berkshire revealed 5 million shares, 1.6 billion stake, sparking a massive run in the underlying after hours. So we clearly see the visual for that, Gus. I mean, I don't know. UNH feels like it was one of those underlyings people were figuring out how the market was going to digest this thing and how it was going to play out. And it feels that with Warren Buffett, kind of being the first one to be like, okay, I'll go ahead and do it. I'll be the one. It gives others the confidence to go ahead and start pulling the trigger and managing their positions however they would want to.
Yeah, obviously a very heavy thing. I don't mean to make light of it, but I, in a purely market context, was actually excited to get involved with UNH after the CEO assassination because fundamentally that doesn't change anything. I mean, you're going to have to find new leadership, which creates a little bit of turbulence, but it's not going to hurt your core business at all. But yes, the regulatory stuff that happened later on and drove them to even lower lows, that was a little bit alarming. And I think that at least for myself, and I'm sure many others, that was what actually put them fully off of this stock. It's just this is too much stuff on fire for me to try to touch. But eventually I was convinced by the bad influence that sits to my right. That's not you, on my other side. And got long some UNH, and I'm happy with it now. It's been a lot of pain. Do not get me wrong. Being long UNH over the last 2 months has been nothing but pain to this point, and I am down massive on the position. But we're finally getting a little vol spike here. Premiums should be juiced. The gamma's going to come into play.
Gamma's going to gamma.
Yeah, so I'm happy with it.
Yeah.
But yeah, last slide here.
the infamous
Luigi Mangione. Mangione, I don't know. I've actually never heard this man's name said before.
I think Mangione sounds about right.
I've just read it 100
What is
times.
He's Italian.
Yeah.
So anybody else Italian want to listen?
Luigi Mangione. I wonder where he might be from. Yeah. But anyway, yeah. 26-year-old Ivy League graduate, valedictorian at his high school. He was apprehended in Pennsylvania. The assassination happened in New York, correct?
I'll double check on that.
I'm reasonably certain happened in New York. He had fled to Pennsylvania. They found him in a McDonald's there, which I always thought was an interesting little part of this. And it was because somebody in the McDonald's called in and said that he looked like the guy. Yeah, New York. But yes, he is alleged murderer of United Healthcare's former CEO, and they are seeking the death penalty due to the severity and potential broader threat to the healthcare industry. And morals aside, I can see why they feel the need to pursue the death threat here, because if you give him anything less, you're going to set the benchmark right here. For
exactly, he's going to be used as
CEO.
Absolutely, yes. He's going to be used as the example.
Yeah. So if you go too light, other people might see that as opportunity. So right. It's very interesting.
Yeah.
But yeah.
No, I mean, it's always funny seeing this picture pop back up, but at the same time too, I know a few months after that, he had released something along the lines of, wasn't there some type of eerie message that was left later on, like you will eventually see, or
he had a manifesto.
That was in the manifesto. Yeah. I think it was. Right?
They found him with a manifesto on his person. Yeah. And yeah, I remember that got out. And now he manages to get like a lot of press from prison. I don't know who's doing all this, but like I've seen tons of like the letters he's written back out to people, the letters that he's receiving in there, comments from him from behind bars. I don't really know how they're making that happen, but
one thing that I think is pretty crazy too is like allowing, based off of what he does, like everybody gets to form their perception of this guy, right? But the thing is, like, it's such a weird spot to be in, like allowing the public or allowing whatever, and celebrities have dealt with this and done this all the time, but allowing the public to construct how everyone and everything perceives you, So I always think it's an interesting thing when you do something to where you're not going to be able to really explain yourself. I mean, I guess that's why they have the manifestos and whatnot, but just having no control over his own narrative is just kind of a weird.
Yeah, and even with the manifesto, like, there's no guarantee that you're ever going to be able to like get that out. Like,
right. Absolutely. Yeah. If anything, there could have been manifestos covered up that we've never got to see because of whatever other issues that could cause.
Yeah, so. Theta Trader, to your point, I also, and I know that this slide greatly contradicts that, I also wish that we wouldn't give these guys any airtime. This guy is simply so famous that I decided to just go ahead with this slide. But yeah, holistically, mass shooters, murderers, anybody of the sort, I don't think that we should ever give them a single ounce of airtime or oxygen. I don't think we should say their names. I don't think we should be posting their pictures everywhere. This is an extenuating circumstance, but I agree with the sentiment. What's going on, Luis? Happy to see you. By the way, happy to see everybody. Big deal, Loan, Theta Trader,